Big smoothie. Yeah, try to avoid that.
Committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. Hearings for the purpose of receiving the Secretary of Treasury's annual report on the state of the international finance system. I now recognize myself for 3 minutes to give an opening statement. Again, the committee welcomes back the Secretary for his annual report on the IMF and the larger international financial system. One of the greatest threats to economic stability today can clearly be seen on the monitors to my left and to my right. That, of course, is a real-time national debt clock. No president in our history has indebted our nation more than Barack Obama, more debt in 6 years than in our nation's first 200. My laptop is awash with both official and private reports calling this level of debt totally unsustainable. Disappointingly, the Secretary's prepared testimony contains nary a word about the threat that the unsustainable national debt presents to our economy and to hard-working middle-income families. In fairness, the Obama administration is not alone in helping put a sovereign nation into insolvency. Europe has a number of practitioners as well. And when Europe runs out of money, many turn to the IMF, whose major source of funding happens to be U.S. taxpayers. Americans who clearly see the impending debt crisis and who rightly suffer from bailout fatigue are scratching their heads at the prospect of being called to continually to fund and institutionalize too big to fail on a global scale. Thus, the activities of the IMF must be carefully scrutinized by our committee. What calls for even greater scrutiny is the role of the G20's Financial Stability Board and its American cousin, the Financial Stability Oversight Council. These organizations wield immense power over our global economy and operate largely without transparency or accountability as part of a shadow regulatory system. As I assume all members of this committee know, our witness heads up the FSOC and Treasury is a member of the FSB. FSOC is especially concerning because, among other matters, it seemingly takes direction from the FSB, the Financial Stability Board. Again, a fairly secretive, unaccountable coalition of global bureaucrats that has found in FSOC a conduit to export its views on regulations and risk models to the United States. Just as one-size-fits-all mandates imported from Washington typically do more harm than good, the U.S. economy does not need a one-world view of risk imported from Europe. We tried that with Basel. Think Greek sovereign debt and Fannie and Freddie mortgage-backed securities. We know where that got us. Yet FSOC has seemingly rubber-stamped decisions made by this international board when it comes to deciding whether large U.S. non-bank financial institutions should be designated as too big to fail. This does not appear to be coordination, it appears to be capitulation. Since today's SIFI designations are tomorrow's taxpayer-funded bailouts, this has potentially disastrous consequences for the American people. The imposition of one global standard of financial regulation by this administration will undoubtedly harm American innovation and American economic growth. It can impinge on U.S. sovereignty and bypass the constitutional check and balance of the United States Congress. Even more importantly, Americans will find themselves paying more to insure their homes and families. Investors who rely on mutual funds to save for college educations or retirements will find they have earned less, and our small businesses on Main Street will suffer as sources of long-term capital begin to dry up. We must not allow this to happen. I now yield 3 minutes to the ranking member for an opening statement.
Thank you very much, Mr. Chairman. I'd like to welcome Mr. Secretary. After 4 failed attempts by the Obama administration to win congressional approval of quota and governance reforms for the IMF, we may have to recognize a new and difficult reality. The case for approving reforms supported by both Republican and Democratic administrations, in which the U.S. retains its unique veto power and Europe loses 2 seats on the executive board, would seem open and shut. But the fund's most vociferous critics, congressional Republicans, don't agree. They argue that the quota change would put more taxpayer dollar at risk and weaken Americans' influence within the fund, Both claims are wrong. In fact, the U.S. would retain its veto power, and its share of the quota increase would be fully offset, resulting in almost no new cost to taxpayers. The real risk to the U.S. lies in continued congressional inaction, which has infuriated many of the fund's other member countries. In fact, last year, the G20 group of leading economies issued an ultimatum to the U.S. approve the 2010 quota deal by year's end, or the IMF would begin to weigh options for moving forward without the U.S. In early January, the IMF's board began to study its option. The failure by Congress to ratify the IMF reforms is seen as a weakening of the U.S. commitment to multilateralism, spurring doubt about our leadership on global economic issues. In response, a number of developing countries, led by China, have begun to act independently to challenge Western dominance in the world economy. Last year, the BRICS nations announced plans to launch a Shanghai-based development bank of their own, which they hope will rival the influence of the World Bank. And China is also moving forward to create an Asian infrastructure investment bank to rival the Asian Development Bank. A world in which countries such as China and Russia are increasingly acting outside the established multilateral system is one that could easily drift beyond control. It's ironic that some of the reasons Republicans have stated for not supporting the IMF quota package have now become the actual consequences of not supporting the package. But the more immediate question is whether the U.S. voice will resonate within the IMF at a time when we alone have allowed a fundamental governance reform to languish in the institution. I look forward to hearing more from you about just what is at stake. I thank you, and I yield back the balance of my time.
Chair now recognizes the gentleman from Michigan, Mr. Huizenga, Chairman of our Monetary Policy and Trade Subcommittee, for 2 minutes.
Thank you, Mr. Chairman, and Secretary Lew, I welcome you back before the committee today. And there are many important international financial issues that need to be addressed, such as, I think, as Jonathan Hill, European Union Commissioner on Financial Services, has pointed out, moving from a regulatory environment to a growth agenda, as was noted. And I think, as he rightly points out, we've got to have the courage and self-confidence to make changes where we see those necessary. But I want to focus on one specific concern of mine, which applies to the IMF and the International Monetary Fund. 2009, Congress authorized a $100 billion commitment to the IMF in an account called the New Arrangements to Borrow. For the past 5 years, the administration has requested $63 billion of that to be transferred to a permanent paid-in capital account, only later to be used to bail out European countries that are deeply in debt, like Greece. And I would like to explore today, why should hardworking, middle-income American taxpayer dollars be used to bail out other countries, especially after suffering from bailout fatigue in our own backyard, dealing with Fannie Mae, Freddie Mac, FHA, a number of others. And instead, shouldn't we be focusing on encouraging these other countries to better manage their borrowing and their spending? Brazil's representative to the IMF stated, according to a memo that has been leaked from 2010, May 10 of 2010, that went to the Wall Street Journal. In that, they clearly stated that, according to the memo, the IMF program is, quote, a bailout of Greece's private sector bondholders, mainly European financial institutions, and rather than require private sector creditors like European banks to take a loss, I'm concerned that the administration chose to bail out these European banks. As the memo shows, representatives from several other nations, including Canada and Australia, warned that the bailout package contained, quote, immense risks. Despite the concerns from several of our allies, the administration chose to support this bailout. And how do taxpayers know this? Not because of transparency, but because of information that was shared with them only when a 5-year-old memo was leaked from May 10. I think this lack of transparency is sadly something that we've come to expect, and it's my goal to change that. So I appreciate that today. Thank you.
Time of the gentleman has expired. The chair now recognizes the gentlelady from Wisconsin, Ms. Moore, for 2 minutes.
Thank you so much, Mr. Chair, and top of the morning to you, Secretary Lew. Welcome back to the committee. I know that there are many international issues that are outstanding, but it must be good to be sitting here with good domestic news. 59 months of private sector growth, a record streak, private sector growth of 2.89 million in 2014, the most since 1997. And I think your stewardship in the debt ceiling debate has been a powerful voice of sanity, and I think that that puts us in a real good position to have the United States be the world's reserve currency, which I think is extremely important. Here's a question that I raised with Chair Yellen when she came, and I'd like to raise it with you. I know that Treasury is taking an aggressive stance to deter, but I want you to punish banks and bank employees that are involved in these tax avoidance and money laundering schemes, as those activities facilitate global terrorism and crime. But I also would like for you to double down on sort of being more surgical so as to not cut off legitimate remittances. It's an issue that Mr. Ellison has been championing, and I've heard from my own constituents that their relatives are literally starving, and so we need to do that. I've also heard from insurers that they're increasingly concerned about ongoing international negotiations on global insurance capital standards that may impact U.S. Insurers. So I hope that you'll be a strong voice internationally for U.S. Insurance companies. And last, I am concerned, too, about the IMF. It supports jobs, exports, financial markets, and indeed, it buoys our national security. And so I agree with you on that, and I yield back.
Today, we welcome the testimony of the Honorable Jack Lew, Secretary of Treasury. As you know, Secretary Lew has appeared before this committee on several previous occasions, so I believe he does not need a formal introduction. Without objection, Mr. Secretary, your written statement will be made part of the record. Secretary Lew, you are now recognized for 5 minutes to give a summary of your testimony. Thank you.
Thank you, Chairman Hensarling, Ranking Member Waters, members of the committee. I appreciate the opportunity to testify before you today. As we meet here today, the United States economy continues to make considerable progress. By almost every metric, America has come a long way since the depths of the worst recession since the Great Depression. Last year, we saw the best year of job growth since the 1990s, and over the past 5 years, America's businesses have created 12 million new jobs, the longest stretch of sustained private sector job growth in our nation's history. At the same time, our economy keeps expanding, and forecasts project above-trend growth for this year. American exports set another record last year for goods and services sold overseas, and our fiscal deficit, which has fallen by almost 3/4, is forecast to decline even further in the next fiscal year. These achievements underscore America's enduring economic strength, and we can build on this progress with the right policies and bipartisan cooperation. The international financial institutions, which include the International Monetary Fund and the multilateral development banks, are a critical part of this effort. Our investments in these institutions are some of the most cost-effective ways to reinforce economic growth at home and to respond to critical challenges abroad. To that end, it is essential that Congress pass the IMF quota reforms. These reforms will put the IMF's finances on more stable footing over the long term, help modernize the IMF's governance structure, and preserve America's strong influence within the IMF, and more broadly, as a leader of the international financial institutions. As the international community waits for Congress to approve these reforms that we helped to design, emerging and developed economies alike are looking to other alternatives as a means of driving the global system forward. Our continued failure to approve the IMF reforms is causing other countries, including some of our allies, to question our commitment to the multilateral institutions that we worked so hard to create. And until these reforms are in place, the United States runs the risk of seeing its preeminent role in these institutions eroded, especially as others are establishing new and parallel financial institutions. The fact is, the IMF reforms will help convince emerging companies to remain anchored in the multilateral system that the United States helped design and continues to lead. And these reforms are a win-win for the United States. They retain our veto power, and they do not increase our financial commitment. That's why we're determined to continue to work with Congress to get these reforms passed as soon as possible. As a clear example of the IMF's role in promoting American security and economic interests, the IMF is providing Ukraine with the critical financial and technical support that it needs. The IMF is the cornerstone of a broader international effort to support Ukraine amid extraordinary circumstances, and it recently approved an augmented, longer-term program that will allow Ukraine to pursue a sustained set of economic reforms. Similarly, our investments in the World Bank and the regional development banks are key to advancing America's economic and strategic interests. My full statement that I submitted for the record lays out in detail how the MDBs help grow export markets, increase opportunities for American businesses, create jobs in the United States, and protect our national security. But let me highlight quickly a few of the areas where these institutions have recently advanced our priorities. In Ukraine, the MDBs have stepped in to address the crisis and stabilize the country, increasing their commitments to nearly $5 billion. In Central America, they're working to spur stronger economic growth, which will help address the root causes of the flow of migrant children to our border. And in Africa, they've taken significant action to fight the spread of Ebola and strengthen health systems. To be sure, the MDBs are essential to global stability. And whether it's fostering inclusive economic growth, promoting food security, or increasing natural disaster preparedness, they are making a difference. It's no surprise that through our nation's history, both Democratic and Republican presidents have made it a priority to invest in these institutions. And as you can see from our budget request, we are using what we've learned from the MDBs and specialized funds to launch a well-designed and cost-effective Green Climate Fund. This fund will enable the poorest countries to build resilience and help cut carbon pollution globally, advancing some of our vital security and development objectives. In closing, let me say that the world is looking to the United States for leadership. And it's as essential as ever for the United States to demonstrate that leadership across all of the international financial institutions. This will, of course, require bipartisan cooperation, and I look forward to working with all of you to make that happen. Thank you, and I'll be glad to answer any questions that you have.
Thank you, Mr. Secretary. I yield myself 5 minutes for questions. Mr. Secretary, I think you know many of us on this committee have a number of concerns about exactly where FSOC and the FSB are headed. We have spoken before about the Financial Stability Board. You have said previously that it's a group that acts by consensus. Most recently, FSB has initiated a new total loss absorbing capacity standard dealing with the G-SIBs. Can I assume then, since it is a group that acts by consensus, that Treasury has consented to the new TLAC standards?
Well, Mr. Chairman, I would say the United States has played a leadership role in pushing towards having TLAC be adopted. This is a preliminary step, so it is going to require...
Okay, so you consented to these standards. I think, as you know then, FSB, after creating the standards, issued an exemption to 3 of the largest banks in the world, 3 Chinese banks, one of which is the largest bank in the world, the Industrial and Commercial Bank of China, with over $3 trillion in assets. So if the U.S. consented to the TLAC standards, did Treasury also consent to the exemption for the 3 Chinese banks?
Mr. Chairman, the TLAC provisions that have been agreed to are preliminary. They require considerable additional action to be implemented. I have to check.
Well, I understand that, but did Treasury, so you don't know the answer whether Treasury consented to the exemption?
Mr. Chairman, the FSB acts by consensus. I'm not familiar with the specific nature of the action you're describing. I would have to get back to you.
Okay, well, if you would get back, it has been reported in the press already, again, that these 3 Chinese banks have been exempt if It's just curious to me that if the body works by consensus and Treasury is a member, that Treasury would not have consented. And I'll let you get back to me, Mr. Secretary, on precisely what Treasury did.
Yeah, I would just underscore, Mr. Chairman, that TLAC requires implementation. What was put forward was a preliminary document that I think would very much strengthen the financial stability of the global system.
Okay, well, I understand that, Mr. Secretary.
But it's not yet in place.
Then I guess it would be curious, because you've also previously testified, I think in your last appearance before our committee, that, quote, the FSB, quote, does not make rules for any of the national governments. Every country has its own ability to make its own decisions for itself. So I'm just curious, if these are preliminary suggestions and not rules, why is it that the FSB found it necessary to grant exemptions, and specifically to the Chinese?
Look, Mr. Chairman, what the FSB does is it raises the goal for global standards to a high level.
Apparently not for the Chinese.
We work in the FSB to try to get the kinds of standards that we think are appropriate in the United States to be adopted around the world, so that the whole world will have high standards.
Okay, well,
TLAC
again, Mr. Secretary, if you would get back to me on that specific issue, and following up on
I would just say, Mr. Chairman, that
Mr. Secretary, I'm sorry, but the time is
okay.
limited.
I was just going to try to give you a little bit of an answer to your question. But.
Well, I've been waiting for several minutes. You said you didn't know if the Treasury consented. The key question is, did Treasury consent in the exemption or not?
The design of the preliminary approach to TLAC is something we drove forward. We not just consented it, we drove it forward.
I understand
it has
that.
a
The
number,
specific question had to do with the exemptions. That's the essential question. Mark Carney, who chairs the Financial Stability Board, recently issued a memo, I believe last month, where he declared he expected, quote, full, consistent, and prompt implementation, unquote, of the agreed FSB reforms. He went on to say, quote, FSB will support the determined efforts of its members through enhanced monitoring of implementation and its efforts across all jurisdictions. We will regularly report our key findings to the G20. So you, again, have stated that the FSB does not impose rules. However, in following their lead in designating non-bank SIFIs here in the U.S. is what FSOC has done, it sounds a little bit like a fait accompli to me. So a similar question, did Treasury consent to the issuance of this memo, or are you aware of the memo from the chairman of the Financial Stability Board?
Mr. Chairman, the effort on TLAC has been something that we have been very much driving forward. I was personally engaged with a number of countries because we think it's very important that the largest financial institutions in the world have deep reserves that can be drawn in so that taxpayers are not held accountable if there are failures in the future. I'm happy to get back to you on all the specific pieces of action. Obviously, I'm not sitting there in the meetings myself.
Okay, so are you aware or unaware of the memo that I just quoted?
Mr. Chairman, I've read a lot of memos from the FSB and on TLAC. I'd have to look at the specific memo that you're reading from.
Okay, my time has expired. The chair now recognizes the ranking member for 5 minutes.
Thank you very much, Mr. Chairman, and welcome again, Mr. Secretary. First, a word about the World Bank, and then I have some questions on the domestic agenda here. You made reference in your testimony to the World Bank's ongoing safeguards review, which will result in revised policies that will govern World Bank lending for years to come. I welcome your statement that you are working hard to ensure that the revised safeguards will strengthen the protection provided by these policies. Having read myself the first draft of the updated safeguards proposed by bank management, I must tell you, you have your work cut out for you. I think the bank's credibility takes a hard hit whenever the bank defends the current draft as a broadening and strengthening of the existing policies. It doesn't strengthen them, and nobody outside the bank believes that they do. I just wanted to share that with you. On the domestic front, as you know, unregulated mortgage credit oftentimes offered with predatory features to vulnerable households without the sophistication to understand the terms was a key cause of the 2008 crisis. Fortunately, the Dodd-Frank Act took key steps to address this problem with the creation of the Consumer Financial Protection Bureau. At the same time, the CFPB has taken many actions to tailor its rulemaking when it comes to small banks and credit unions, and has the authority to amend its regulations if access to credit, especially for our most vulnerable population, become too constrained. Even though the CFPB has been exceptionally reasonable in their approach, last year, the House passed a number of bills to provide additional exemptions to consumer protection, citing lack of credit for low-income borrowers. Can you tell us what data the Treasury has on credit availability since the crisis, and whether you think Congress needs to pursue legislation to create more exemptions from consumer protection rules? We need some help.
Congresswoman Waters, I think that if you look at the current experience in the mortgage market, it's a little bit too hard, actually, for people to get credit in some cases. People with strong credit records, the ability to repay, are having a harder time than they should. It takes the most pristine credit. If you look back to what we were trying to stop after the financial crisis, it was to stop people from getting in over their heads with mortgages they didn't understand, with hidden fees and all kinds of charges. I think that if you look at the way the regulatory agencies have been looking at this, they've been trying to be clear in giving guidance to financial institutions who have, if anything, been tighter in their credit standards than might have been intended. On the other hand, they're not going back and saying we should go back to the kinds of policies that let people get into mortgages they couldn't afford, and to do it in ways that they couldn't understand through all kinds of hidden fees and charges. So I think it's a balance. The regulatory process is very attuned to this. You're seeing discussions of this in both the FHA and the FHFA in terms of the putback risk discussions. My own view is that it is a part of a larger trend in the financial services industry where they're getting more conservative in some ways, in some areas, than was intended. That'll come up in terms of some other questions that I believe will come up this morning. We need to be clear about what we're trying to do and why. I think that it is very important to maintain the regulatory structure so that we don't go back to a system where lenders can get mortgages out there so that people are over their head and highly likely to default. On the other hand, if people are creditworthy, they should have access to credit.
So we are witnessing this inability of our constituents who certainly can afford to get mortgages being shut down and not being given credit by many of our banks, as you have stated. At the same time, we still see actions by banks that are similar to what we thought we were stopping following the 2008 crisis. You know, we had long discussions about everything from no-doc loans to other kinds of exotic products that were being put out there. And it seems that the banks still want to have some kind of a way to continue these efforts, and at the same time, you know, put us all in a bind by shutting down on credit until we basically agree with them.
So I actually think if you look at the rules that have come out, the CFPB rules, for example, that I think very clearly make it impossible to issue the kinds of dangerous products that were issued before. It has made our system safer. That's not the problem. The question is for people who are getting mortgages, applying for mortgages that are straightforward, English language document mortgages with fees and charges that are clear and costs that they can afford, are the credit standards so tight that people who are creditworthy not getting credit? We are very much of the view that people who are creditworthy should have access to credit. We're very much opposed to the idea that we should go back to loosening the rules to allow the kinds of mortgages that help create the financial crisis.
So do you believe that what the CFPB has been doing and the approach that they're taking is certainly the right approach, and somehow that's going to help open up credit opportunities, or
Yeah,
what do we do about opening up access to credit?
I think that they have made a lot of important changes that reform some of the basic problems. I think that to the extent that that financial institutions are concerned that they want to be even more constrained than was intended, it is sensible for agencies like FHA and FHFA to be looking at things like putback risk to try and clarify it.
Time of the gentlelady has expired. The chair now recognizes the gentleman from Michigan, Mr. Huizinga, chairman of our Monetary Policy and Trade Subcommittee, for 5 minutes.
Thank you, Mr. Chairman and Secretary Lew. I want to hit on a couple of things. First, I want to discuss a little bit about international insurance, then some of the financial services trade negotiations, the IMF, as we talked about in my opening statement. But I'm going to start off with the insurance situation. For coming out of the state legislature, I'm very familiar with the state regulatory based oversight that we have through our states. But in the latter half of 2014, we saw Treasury representatives and Federal Reserve vote at the International Association of Insurance Supervisors to shut down the transparent process and eliminate stakeholder participation in the formulation of these international insurance standards. And accordingly, how does Treasury justify the fact that in international discussions it has really undercut and not supported the state regulators, even as they had requested formally opposition to closing those meetings at IAIS and their opposition to the one-size-fits-all global capital standards in that? And how do you view and encourage transparency in these international meetings and negotiations?
You know, Congressman, I think that if you look at the review of insurance rules, there's been a lot of give and take, a lot of review of views from the industry, from state regulators, from national voices.
They don't say that now, though.
Well, no, there's a lot of back and forth. I think that...
But you don't deny that the IAIS has booted them out of the process.
Well, they're still very much taking comment from outside parties.
Taking comment is very different, though, than being at the table when the discussions are happening. And I guess my question, and I know this has come up repeatedly as you've appeared here, what is the active role that Treasury is taking when we are going into these negotiations? And my suspicion is this is a longer conversation, and I would love to have a written response from you in a timely fashion on this specifically, because I think this is something in my committee, Monetary Policy and Trade, I want to dive deeper into. So
I'm happy to pursue it outside of the hearing in greater detail. I would just say that...
and you'll give me a written response in a timely fashion?
I will answer any questions that I'm asked.
I'm mostly concerned about the timely fashion part. I know sometimes that can take a while.
We'll do our best. I would just say that we do have a history, as you've stated, of state regulation of the insurance industry. We also have to have some ability to look at these issues nationally. We've tried to strike a balance where we've been respectful of the state regulatory process and history, but in international bodies speak with one voice.
Yeah, I understand that. They certainly feel a bit cut out. As TTIP, as we're discussing negotiations, TTIP negotiations continue. It seems to me that the U.S. position on financial services has been to negotiate on market access issues, but refuse to encourage or engage on the regulatory side. I understand the EU has put forth a proposal on regulatory issues to U.S. negotiators. Why does Treasury refuse to engage on this topic?
Well, we've been very clear with our European counterparts that we think market access is an appropriate issue to be negotiated in a trade negotiation. We do not believe that prudential standards should be subjected to trade negotiating processes or trade remedies.
Isn't there a way, though, to discuss regulatory proposals that doesn't undermine the post-crisis reforms that have occurred? Both sides of the
I think we have in the FSB, in the G20, in the OECD, a lot of international conversations where we look to try and reach high standards that are as harmonized as possible in a system of national responsibility. What I don't think is appropriate is to permit our prudential standards, for for example, to be challenged in a trade context.
But it doesn't sound like, going back to my first question, that you're engaging those people that are going to be there trying to make sure and working with our Treasury.
Oh, no, I've engaged on an ongoing basis. I just met with Lord Hill in Washington a few weeks ago. I met with him in Brussels a month or so ago. So we engaged quite closely.
In my remaining minute here, I want to hit on the IMF. Do you agree with Secretary Kerry that there is no permanency to the United States line of credit at the IMF, and that these resources are not, in fact, permanent but are expire, and that, to quote him, it has to be repaid at the end of 5 years if it's not renewed? And those comments of his were made more than 5 years ago.
Look, I think that what I believe about the IMF is that we very much need to ratify the IMF reforms so that our commitment to the new arrangement to borrow can be converted into a capital contribution in a strengthened system that has the resources to deal with the next financial crisis.
So you don't
or other
believe
crisis
that
when it comes.
you don't believe that we should be able to close down this line of credit? It's a special line of credit that 5 years ago Secretary Kerry had sort of shepherded through and was touting as, hey, in 5 years this is going to be repaid.
I think that we've made clear that we think the IMF reforms are the best way to have a strong IMF and a U.S. role in the IMF that has the leadership role that we need for our national security.
That ticking in the background is a signal to both of us, but I do appreciate your commitment to get back to me in a timely manner with some written response.
Time of the gentleman has expired. The chair now recognizes the gentleman from Massachusetts, Mr. Lynch.
Thank you, Mr. Chairman. Welcome, Mr. Secretary. Happy St. Patrick's Day.
And to you.
Nice tie. Let me stay with the topics that Mr. Huizenga has raised. Let's go back to the IMF quota reform issue. As it stands now, does this do anything to the voting weight either of the EU in respect to the United States? I know sometimes these can shift over time, and I'm just concerned about whether or not we have, in a governance respect, the same weight and the same influence that we have today.
Congressman, the thing about the IMF reforms that's so important is that it preserves the U.S. position and it provides for some reallocation of representation basically between Europe and emerging economies. It was a difficult negotiation. It was critical to us to maintain the U.S. position in the IMF. And the reason it's so important to ratify the agreement is that we're the last country to step forward. We right now are the only country standing in the way of having the IMF reform become the policy of the IMF. The impatience around the world is becoming extremely high. It is as if the United States said we recognize the emerging countries' need to have more voice, but now we won't take the step, even though it doesn't hurt the United States. On the contrary, it strengthens our position. I think it's critically important to our leadership, not just in the IMF, but more broadly, for us to get this done.
All right. And you feel comfortable that we are not, I could understand if we were reluctant to engage in a deal where our loss was everyone else's gain. I mean, I totally understand taking a pro-American position on that, but you're quite sure that we're not giving the store away here.
Absolutely, and I have to say, ironically, we're being criticized on both sides by the countries that gain and the countries that lose for standing in the way of the reforms.
Okay, let me go over to the IAIS issue, the International Association of Insurance Supervisors. We're trying to work out some reforms there as well, adopt some standards, and I understand the need for this, and I understand that the AIG issue is probably hanging out there on behalf of some of our international neighbors about the need for reform. But I've got a lot of big insurers in my district, and we've got a lot of insurers that do a very good job here in the United States. And I'm just concerned about whether the integrity of the insurance system is being maintained during those negotiations. I know Mr. Huizenga was concerned about the lack of our people at the table. Who is at the table, and how vigorous is our representation?
Congressman, Treasury is at the table. The bank regulators are at the table, and I think that the real question is, do we have the right kind of standard for insurance companies? And we've made clear that we think that insurance companies should be held to an insurance company kind of standard. Just last year, Congress passed a law, and it was signed into law, that permits our regulators to take account of that as they impose capital requirements on insurance companies.
Yeah.
It's now being implemented here domestically. We will control the United States policy through our regulatory agencies. So
Okay.
if we designate an institution in the United States, the Fed will make that decision.
All right.
And fundamentally, it is a national authority.
All right. Now I'm down to my last minute. Let me try to drill down on that issue a little bit more. There's concern regarding ComFrame, which is they're trying to compel our side to basically adopt this ComFrame. And so I haven't read it, I confess, but seems to have the attention of our insurance industry, and I'm a little concerned about that. And secondly, we have GISIs now. I have GISIs, which is globally significant insurance something or other. But obviously that brings enhanced supervision on our insurers here in the United States vis-a-vis our international neighbors.
Well, ultimately, the only thing that puts enhanced standards on our companies is the regulatory actions taken in the United States. So the international process is one trying to drive the international standard to a high level, but each national authority retains the responsibility to regulate its own. And that's when we make a designation at FSOC, we're the national authority doing the designation. If a firm is designated, the Fed will be the national authority making the...
I think they're concerned about a follow-on effect. In other words, you adopt something at the international level that requires us to do as you say, change our regulations.
Time of the gentleman has expired. The chair now
Thank you, Mr.
recognizes
Chairman.
the gentleman from North Carolina, Mr. McHenry, Vice Chair of the committee.
Mr. Secretary, we had the Fed Chairwoman Yellen in a few weeks ago, and I asked her about the cumulative cost of regulations that the Fed and the FSOC are proposing. She continually referred to a 2010 study by the Basel Committee as a reference point. I pointed out that it's 5 years old. I would remind, obviously, and long before we, fully implemented or it got this far in the process of new regulations. As chair of the FSOC, has there been a study done on the cumulative cost under?
Congressman, I'm not sure what constitutes a study, but I think that the regulators are attentive to the cumulative impact of the steps that they're taking.
Attentive, but is there some point of reference for the cumulative cost of these new regulations?
I mean, each one, for example, that requires...
You can say no, it's okay. I mean, I'm just trying to get a straightforward answer.
I'm happy to answer the question. I'm trying to. If you look at each of the steps taken, you can look and see what the capital requirements are, and you can add up the burden, as it were. And I think that it has been very clear that there was a goal of internalizing risk in firms, which does increase somewhat the cost to firms of their activities. We think that's appropriate. It's appropriate because it should be the burden of a firm, not the burden of the public, if anything goes wrong. And having things like more capital is part of addressing the risk that caused the financial crisis in the first place.
But more broadly, regulation, not simply the requirement for additional capital, which is part of your answer. But is there a broader review that you could point to?
So I'd have to go back and check if there's any kind of a comprehensive review, but the costs that are, I think, most significant for firms are the ones I'm describing.
Yeah. Would you commit to providing this information to the committee?
I'm happy to go back and look at what we have.
Sure, thank you. So back in June, you testified before this committee that it was premature, in your words, to evaluate the effects of government regulation on market-making activities, Volcker, basically, which is in some regards caused liquidity to vanish in certain marketplaces. So is that still your view, that it's still too premature?
Well, I think as a practical matter, Volcker is not in effect. So one is asking what have firms done in anticipation, not in compliance or because of requirement. I do think that there has been some movement by firms to get ready for the Volcker rule. I think that that's a good thing because they've had fair notice and there was some extension of the deadline to make sure they could prepare in an orderly way. And if we're saying to financial institutions that they should exit the proprietary trading business, to do it in an instant is not the right way to do it. So I think it's premature to evaluate what its full impact is, but I think it's a good thing that the industry is preparing for it.
So we had pretty significant volatility on October 15th of last year in some government bonds. Did you follow that?
I followed it, yes.
Yes. Do you think that is it all connected to diminished liquidity provided by institutions that have gotten out of prop trading in anticipation of Volcker?
You know, Congressman, what was going on October 15th, it was a complicated set of things. There was a lot of news going on, so that there was generally an off-risk kind of mood in the market that day. I think that there are many who jumped to a conclusion prematurely that it could all be set at regulatory practices. I don't think that there's no evidence that I've seen that suggests that that was the predominant factor. We're looking at this.
Was it a factor, though?
Well, look, there were many things going on,
You said there were many things going on, but do you think the Volcker requirements that firms in anticipation of Volcker have gotten out of this place, that some of the shock absorbers aren't there in the system?
Look,
I mean, that's a reasonable question.
The evolution of the markets is being driven by a lot of factors at the same time. So I'm reluctant to attribute causality to any one thing. You have different players in the market, different mix of where the velocity is coming from, many of whom are not covered by Volcker. So I think that this is something that requires a lot of analysis. We're doing it, and I'd be happy to share with you a more complete analysis when we complete it.
So in many regards, I think FSOC is creating more problems by diminishing liquidity in the marketplace, which will create future problems potentially in the marketplace. Is that a concern to you as chairman of the FSOC?
We are concerned about making sure that we maintain the most liquid markets in the world. I do think that it's a mistake to attribute to regulatory policy what happened on October 15th, and I'd be happy to follow up with you.
Time of the gentleman has expired. The chair now recognizes the gentleman from California, Mr. Sherman.
Well, one just comment for the record, our materials for this hearing talk about preserving our veto at the IMF. We don't have a veto at the IMF. I've talked to the number 2 over there, said could we prevent loans to or economic aid to Iran. He made it very clear that that was not the case. I remember when prior administration urged us to put more money in the World Bank because we had a veto there, that Iran got over $1 billion of loans from the World Bank over our objections. So we can devote more resources to the IMF, but we still don't get a veto over decisions to assist individual countries. I want to focus on currency manipulation. The administration wants to trust on and even fast track on TPP, but they told us they're not going to include currency manipulation in that. They've bought into, because this idea that if somebody in the world says that we're manipulating our currency because we have interest rate policies, that therefore we'd better not talk about the deliberate and true and actual manipulation of other countries. Every time I raise this question, the answer I get is, but China, as to why we're not sanctioning China for its currency manipulation, I'm told China is cheating less. And I haven't been married as long as many of the members of this committee, but I've been advised by at least a few not to use the line, but honey, I'm cheating less. The law is clear. If China's manipulating its currency, you're supposed to designate them. Other than the fact that that would make them really mad, and they are cheating less, why haven't you carried out existing law and designated China a currency manipulator?
Congressman, we have engaged directly with China in an aggressive way on this question of currency policy, and we've made enormous progress. And I think if you look
You're getting them to cheat less, but you're not following the law.
Congressman, I think if you look at what the goal of the currency report is, we have put a bright light on practices that need to change. We have been aggressive in international bodies and in bilateral negotiations to push hard to get change. And with China, we've, in the last year, gotten some substantial recognition of that, both in terms of not intervening in the way—
Mr. Secretary, you're not following the law, but you have persuaded them to cheat less.
But Congressman, if I could say, the consequence that it comes from the designation you're describing is an intensive consultation process.
What about
We are
the
doing that.
consequence to our constitutional system when the executive branch takes the attitude, Congress doesn't know what it's doing, so we're not going to follow the law? I would say the damage that TARP has done to our social contract, the damage that an attitude of we shouldn't follow the law because it'll have bad consequences does to the nation's social contract is very significant.
I would just say, if you look at the record—
Mr. Secretary, I've got to go on to the next point. Last time and the time before that, I asked you to take a look at Worldwide Unitary so that we could finally tax international corporations in a fair manner. You asked me to talk to your Assistant Secretary for Tax Policy, and you told me that you personally would look into it. He said he wouldn't bother to look at it. He's too busy. So I'm going to stop asking you about it. But if we were serious about taxing multinational corporations, we would be looking at it seriously. We're told that some of the giant banks are too big to jail. We've now had large financial institutions abroad conspire with U.S. taxpayers to deliberately, intentionally— this isn't avoid tax, this isn't loophole, this is just cheat on taxes, millions of dollars. But all of these people are really rich taxpayers. Are they too big to jail, too well connected to jail? You've been given the records of thousands of those who have conspired deliberately in a premeditated manner to cheat on their U.S. taxes. Is anybody going to jail?
So, Congressman, on prosecutory matters, we don't make—
Has the Treasury
prosecutorial
Department
decisions.
put together a criminal case? Have you called the Attorney General and said, you've got to give a high priority to prosecuting because if we don't, our, quote, voluntary tax system doesn't work?
I think we've been clear that our policy is no one is beyond the law.
Yes, but no one's in jail. I yield back.
Time of the gentleman has expired. The chair now recognizes the gentleman from New Jersey, Mr. Garrett, chairman of our Capital Markets Subcommittee.
Thank you, and I think I'll follow along the issue of whether the administration follows the law. Mr. Secretary, you've been in government for much of your professional career. You spent the first 2 years of the Obama administration from 2009 to November 2010 as Deputy Secretary of State for Management and Resources, and according to their website, that serves as the Chief Operating Officer for the department. The Deputy Secretary serves as a principal advisor to the Secretary on overall supervision and direction of resource allocation and management activities of the department. So, you were the department's Chief Operating Officer during that period of time under Secretary Clinton, responsible for advising Secretary Clinton on resource allocation. While you were at the state, were you also responsible for enforcing the department's policies regarding the use of personal email accounts and record retention? And if not, who was responsible?
Congressman, I was at State during that period, and I was responsible for a vast array of responsibilities, both in terms of managing the department and our international
Were you responsible
program.
for the enforcement of the
And
policy regarding emails?
I don't recall having had a lot of any conversations that I remember on
So
email
who was
policy.
responsible for that?
I would defer to the State Department. They're looking at this, and would be happy to respond.
But you were a Chief Operating Officer, so operation of the equipment and all the rest and the policy, that was not your responsibility.
No, clearly, the functions that did the administrative work at the State Department reported up a line. I'm telling you, I didn't spend a great deal of my time on that. I was responsible.
Were you, not whether you spent much time on it, were you responsible or not?
I take responsibility for the operations that reported to me at the State
Was
Department.
personal email accounts part of your responsibility?
Well, personal email accounts are not part of the State Department.
Were you responsible for the enforcement of the policy regarding personal email accounts? You don't recall? Is that what you're saying?
Congressman, I don't recall being involved in policymaking.
Did you discuss with the Secretary whether any federal law, regulation, department policies prohibit her from using private or government accounts?
I have no recollection of any discussions.
Did you ever approve then of her request to use personal email accounts?
Not to my recollection.
Okay. Were you aware that the Secretary was using personal email accounts to conduct State Department business?
Congressman, the State Department is going through all of this material.
I know, but I have you right here, so I'm asking you the question.
Look,
Were you aware that she was using it at the time?
I was aware that she was emailing with people. I didn't pay a lot of attention to what email she was using.
Really? I mean, I just emailed my staff a moment ago on another matter, and I emailed them, and as soon as I emailed them, even though it's an old BlackBerry, which has terrible service and otherwise, and I'm not very happy with it, as soon as you email the person, it has their name and their account right on top of it. And I assume you were in contact with the Secretary on a regular basis?
I actually, my normal communications with her were in person or on the phone.
That's your
for
normal,
the
but
most
were you
part.
also in contact with her on
occasionally, yes.
And so you're saying during that course of 2 years, you never noticed whether or not where her account was coming from?
Congressman, I'm telling you that at the time, I was mostly paying attention to the substance of what I was communicating with.
Did you have, well, I do too, but I often notice exactly where the email accounts are going to because I know what the rules are about whether I should be doing something over personal or over private. Are you telling me that you never made inquiry when you were emailing with people in the Department of State as to where you were emailing to? Is that what you just said?
Congressman, I think
Now, could you answer that question? When you emailed somebody on official business, did you ever make notice of who you were emailing to and what account you were emailing to, or did you, just as you just indicated, say you did not pay attention to where you were emailing to?
When I put somebody's name in my BlackBerry, as you do with yours, an email address pops up.
Right. And did you ever make notice of where you were emailing, or you did disregard that policy?
I just don't recall, Congressman.
No, I'm not asking you whether you recall. Do you make, now as Secretary of Treasury, do you make notice of where you're emailing to?
Our policy at Treasury is clear.
I understand your policy. What do you actually do? Do you make notice of where you're emailing to, or you disregard that?
I certainly, I'm always looking to make sure it's the right person.
Excellent. Were you doing that when you were under the capacity there? You just said you do it now. Did you do it back then?
I think we all know that you put a name in, and sometimes you get a name that isn't the name that you intended.
Right?
And we want to make sure
A moment
we're doing our
ago, you
emails to the
said you
right people.
always checked. Did you check when you were emailing to Secretary Clinton?
But if somebody's name pops up, it doesn't automatically pop up.
A moment
with their
ago,
full
you
email
said you
address.
always checked. Did you check back then, or you do not
I don't know how
recall?
your email system works, but often the name pops up and not the full email address.
I understand. So you're telling me that when you email people on official business now and as Treasury Secretary and also in
I make
Secretary
sure
of
it's the
State,
right person.
you did not ever check to see where it was going to as long as the name was up there, that was satisfactory for you. You did not make the inquiry as to where you were emailing. Is that what you're telling me?
In my address book, I have people's official address, and that's where I email to.
And when someone sends, so you never make the further check? Thank you.
Time of the gentleman has expired. The chair now recognizes the gentleman from Georgia, Mr. Scott.
Thank you. Welcome, Secretary Lew. Let me first start out with asking you, when we were dealing with the Wall Street reform and TARP, we in this committee put forward what we refer to as the hardest hit program, which was to help struggling homeowners stay in their homes. And it amounted to roughly about $4.5 billion. My state of Georgia's share was $39 million. But as a part of the agreement in the legislation that we passed, we put a sunset date that said if the states do not use whatever the balance the state does not use by the end of 2016, it returns to the Treasury Department. So my question is, how are we doing? Do you have a system in place in the Treasury Department where you are gauging these states? The need is tremendously great, as you know, and continues to be. We now have only, according to the legislation, about 21 months before the end of 2016 when the balance of the money they're not used comes back to you. Do you have a report on how these states are progressing? From our indication, certainly in a hard-hit state like Georgia, none of that money should be coming back. Much of it goes to help struggling homeowners to be able to pay for their mortgage up to 24 months. It's desperately needed, and desperately needed for our veterans, who many are facing mortgage problems. How are we doing on that? And do you have any system in place to gauge how these states are doing it, to make sure that they are leaving that money in their states to help the American people?
Congressman, we do very much want each of the states to use their hardest hit fund allocations for the purposes that it was designed. We've tried to be flexible in working with states to make sure that the funds can be used not just for some of the more obvious purposes, but for things like in Michigan, the destruction of housing that's a blight on the community. I'd have to go back and check on what the state-by-state numbers are.
Well, let me ask you to do this. My time is short.
But we are working to make sure the money gets spent properly.
If you could you, I'm sure other members on the committee would like to know how their states are, but I am particularly concerned.
I'd be happy to get back to you.
Particularly to know what is the balance left in the state of Georgia of that $39 million, so we might be able to light an additional fire under to make sure that money stays in Georgia. Now, let me ask you about ISIS, if I may. What steps has the Treasury Department taken to engage with our allies abroad in disrupting ISIS's terrorist funding? And particularly, to what extent are countries across Europe and in the Middle East coming together behind a common strategy to disrupt ISIS financing?
Congressman, we have worked very closely with our allies in Europe and in the region to do everything we can to stop the flow of funds to support ISIS. I think that
specifically, what could you give us an idea?
Well, there are different countries that have different degrees of visibility into where money is flowing. So we have had, on a bilateral basis, conversations with many countries to make sure that they put their resources to bear to look at questionable entities and individuals. I've had many conversations at a very senior level in governments in the region to get the commitment to put those resources into it. I think the reality of ISIS funding is that it's not principally coming from money flowing outside of the country in. The way ISIS has been funded, in part, has been to conquer territory and to take the bank vaults and to take the money in the bank vaults. It has been to pressure people in an area to make payments to support ISIS.
Have we been able to increase our the participation with Turkey, for example, in terms of the oil?
Yeah, we've worked closely with Turkey, brought a lot of pressure to bear for Turkey to be attentive to and effective in controlling the flow of oil. Frankly, our military actions have done quite a lot to disrupt some of that oil flow. Turkey has pledged to be cooperative, but it is a very long border, and there's very informal means of moving contraband across the border. So it's a difficult challenge, but we are very much engaged with them to try and stop it.
Thank you, Mr. Secretary.
Time of the gentleman has expired. The chair now recognizes the gentleman from Texas, Mr. Nagelbauer, chair of our Financial Institutions Subcommittee.
Thank you, Mr. Chairman. Thank you, Mr. Secretary, for being here. Secretary Lew, as you know, you serve as chairman of the Financial Stability Oversight Council, and FSOC is charged with assessing risk and monitoring threats to the financial stability. In 2010, the Dodd-Frank Act designated that institutions above $50 billion in total assets would be considered systemically important, that their collapse poses a risk to the financial stability. Unfortunately, during that period of time, there really wasn't any analysis of the factors of what is a systemically important feature. And so arbitrarily, that number was set at $50 billion. Today, there's quite honestly a bipartisan and even bicameral support growing that to increase this number. Since really during that time, they really didn't take the time to analyze whether it should be 50 or 75 or 25. They set that arbitrary number. As you know, Section 115 authorizes FSOC to recommend to the Federal Reserve that the $50 billion threshold for SIFI designation be raised. Unfortunately, I can't find any evidence where FSOC is actually taking any efforts to analyze the appropriate level for SIFI designation. So I guess the question I have today, has FSOC completed a review under Section 115 to raise asset thresholds for application of enhanced prudential standards? Yes or no?
Well, Congressman, FSOC and the members of FSOC, the regulators on FSOC, have been very attentive to the difference between small, medium, and large-sized financial institutions.
But that wasn't the question, whether they were being attentive or not. Have they taken a detailed analysis under Section 115 to determine whether additional threshold could be raised?
So I think the question of formal versus discussions is really the issue. I mean, there have been a lot of discussions about
But I'm talking about formal. So the
yeah.
question, answer, what is the answer to formal no?
I'm not aware of formal review, but there's been a lot of, I mean, when I say attention, what I mean is that in the development of regulations, there's a lot of flexibility of what the standard should be for institutions of different size. Nobody has confused a $50 billion with a multi-trillion-dollar institution.
Since they weren't able to ascertain that when the legislation was put in place, they gave you a vehicle, and I guess what I'm hearing you saying is maybe there's been some discussion about that, but nothing formally has been done to address whether that threshold is too low. Is that correct?
Yeah, I'm not aware of a formal review, Congressman.
So now, are you aware that last month the OFR released a report examining systemic indicators, and they used a framework, I think, of 5 factors that categories that were created under the Basel Committee. And interestingly enough, the results demonstrate a huge variation between systemic importance between the largest banks and the regional banks. Are you familiar with that report?
Yes.
And were you surprised at the results of that?
So, Congressman, I think that I'd have to go back to look at the details of the report to comment on it in detail.
But did you find any flaws in that analysis? Did you think that was a fair analysis of the factors and that the results were?
Yeah,
it's your report. I mean,
well, no, OFR it does independent work. I don't review their reports before they put them out. I'd be happy to look at it and give you a thoughtful comment on it. You know, I'm not surprised that they're looking at the issue now.
But I guess the question is since you have the authority under Section 115 to do that, and there's been a lot of discussion about that, and even bipartisan support, bicameral support to do that, I'm just kind of surprised why FSOC hasn't taken on the features of 115 to do that.
So, Congressman, what I focused on in the 2 years that I've been chair of FSOC is to make sure that we implement the provisions of Dodd-Frank. At each step of the way, I've encouraged regulators to take note of the difference in what they do for small, medium, and large-size financial institutions. I believe they've done that on an ongoing basis. They're continuing to do it, and to the extent that they have flexibility, it's appropriate to use it. I'm not ruling out the use of Section 115. I just think it's a question of first getting through the process of implementing the full Dodd-Frank, which is what we've been trying to do.
Would you then, if you've seen the OFR report and seen the wide range there, would you agree that probably that process needs to takes place, that the $50 billion threshold is maybe not the right number?
Well, I don't think there's any question that a $50 billion institution has different characteristics than a money center bank. And I don't think that the only solution is to move the limit. It's to look at what are you doing to make sure that you're appropriately looking at institutions of different size.
So that's
under
all
the
more
law.
reason to do the 115 analysis.
And which I'm happy to go back and take a look at. But we have been very much trying to stay focused on making sure that the burdens on medium-sized institutions are appropriate to those institutions.
Time of the gentleman has expired. Chair now recognizes the gentlelady from New York, Ms. Maloney, ranking member of our Capital Markets Subcommittee.
Thank you and welcome, Chairman Liu. I would like to ask you to help me understand this chart. This chart is a chart that shows the economy. It begins in 2008 when President Obama was elected, and the deep red shows that the the economy was hemorrhaging. We were losing 800,000 jobs a month. The blue tracks the job growth under President Obama, and the picture begins to improve. We see 5 straight years of job growth, 12 million private sector jobs over the past 60 months. And what factors do you think were most important in achieving this dramatic turnaround where we have grown 12 million private sector jobs in the past 60 months and a positive job growth for our country? Of course, it's never good enough until every American has a job, but it certainly is a vast improvement. To what do you attribute this dramatic turnaround to?
Congresswoman Maloney, it's a little far, but I recognize that chart even from this distance.
It's a chart I'm sure you've seen many times.
Look, the economy was in free fall when the president took office. That's what the red at the left-hand side of the chart shows. I have to start by saying the grit and determination of the American people are the reason that we have the ability to bounce back. But it's also because our government responded quickly and aggressively to deal with the causes of the problem and to get the economy moving again. So you look around the world, where was the response to the financial crisis and the economic crisis most direct? It was the United States. We did financial reform to fix the problem. We went into the business of jump-starting the economy with the Recovery Act, which I think made a huge difference, and then with payroll tax cuts that gave additional boost to the economy when it needed it. And our Fed led the world in thinking through how to use monetary policy creatively in a world of very low interest rates. I think you look at what we did, we used all 3 levers, reform, fiscal policy, and monetary policy effectively. A lot of the world was slow to use the tools and then didn't use them all as effectively as they might. I think that one of the things that our experience should teach the world is that you need to use policy and you need to use it at the right time to get the best recovery.
Thank you. This committee has been somewhat critical of your role on FSOC and charging that it is apparently not transparent enough or accountable enough to Congress. But it seems to me that FSOC has been very accountable to members of Congress and to stakeholders. And I'll give one example from my own experience. Last year, I sent you a letter suggesting 4 improvements to the process for designating companies as systemically important. And last month, the FSOC adopted all 4 of those reforms as part of a package of improvements to the designation process. So it seems to me from my experience that FSOC is willing to engage constructively with Congress, respond to our concerns, to our questions, and try to find common ground. In this case, you actually approved the suggestions that I put forward. Can you describe the process that FSOC went through to identify the reforms that were adopted last month? And do you think these reforms strike the right balance between providing companies with a fair, thorough, and transparent process and preserving the FSOC's ability to identify, monitor, and mitigate systemic risk? By the way, thank you for the FSOC decision on my concerns.
Congresswoman, and we thank you and other members of the committee for offering advice because FSOC is a young organization. It's roughly 5 years old. I think we have very solid rules that we have used from the beginning. But as with any organization, we should remain open to what can we do to do even better in the future. The suggestions that you made were one of a number of sources of input. We did open the process so that there was consultation both with Congress and with outside parties. And I think that what the changes demonstrate is that we very much want to have a process where parties know where they stand, where the flow of information back and forth is as efficient and effective as possible. I would just note that before the rule change, there was a great deal of communication already back and forth with parties. It's not that we went from a world where there wasn't to a world where there is. But I think the rules changes are good clarification going forward.
Lastly, I'd like to ask you about Germany, France, and Italy's decision, which was announced last night to join the Asian Infrastructure Investment Bank. This follows Britain's decision.
Mr. Chairman,
your
if I might
comments.
just take a minute to respond.
A very brief moment.
Congresswoman, you know, the issue about the Asia Infrastructure Investment Bank is an important one. There are obviously vast needs in Asia and many parts of the world for infrastructure investment. Our concern has always been not is there going to be an investment institution, but will it adhere to the kinds of high standards that the international financial institutions have developed? Will it protect the rights of workers, the environment, deal with corruption issues appropriately? Our point all along has been that anyone joining needs to ask those questions at the outset. And I hope before the final commitments are made, anyone who lends their name to this organization will make sure that the governance is appropriate.
Time of the gentlelady has expired.
Thank
The chair
you.
now recognizes the gentleman from Missouri, Mr. Luca Meyer, Chairman of the Housing and Insurance Subcommittee.
Thank you, Mr. Chairman. Mr. Liu, at least you got your green tie on this morning, so my wife's half Irish. I mandatorily have to wear this one today.
I spent 8 years in the office of Speaker O'Neill, so I was trained early.
Thank you, sir. We've touched a little bit on some of the issues this morning that I want to talk about. I'm the chairman of the Housing and Insurance Committee, so the insurance stuff is what I want to talk about this morning, especially with regards to international capital standards and how they would be implemented here in the United States. I had a meeting this morning with a group of insurance folks, and they're very concerned. And I'm very thankful for your comment that you said insurance, if I get this right, should be held to insurance company standards here in this country. So I assume from that comment that you want to regulate even companies that would not necessarily be big enough to fall under the international standards, continue to regulate them in insurance standards that we have today. Is that correct?
Well, Congressman, the only companies that I'm referring to are the relatively few companies that we've designated under the FSOC process that then go on for federal oversight by the Fed. States are doing the regulation of firms on a day-to-day basis.
So basically what you're saying is you don't want to regulate at the federal level than the rest of the insurance companies with international capital standards
Well,
that you're going to use for the big guys then? Is that what you're going to do?
I mean, the standards that I'm describing are the ones that apply to the firms that are subject to Fed oversight,
Right,
which
the
is, you know, a
G-SIFIs
relatively...
or SIFIs,
yeah,
right.
G-SIFIs, yeah.
So you're going to regulate them differently then?
Well, look,
With regard to capital standards?
I think that if as I've heard from state regulators and from firms, the state regulatory process in general does apply insurance standards to insurance companies. So I think the concern was that in making a federal designation, would the Fed have the flexibility to apply an insurance standard rather than a bank standard to those designated firms? And I think with the passage of the Collins Amendment, it's now clear that the Fed has that authority, so they will do so. The capital standards will reflect appropriate standards, which are being developed now, so I can't tell you specifically what those standards will be. Obviously, there's a difference between what is a pure insurance product and what is other forms of financial activity.
So I guess the question is it your intent to subject the domestic insurers that are not regulated at the federal level to international capital standard? What would be your answer, yes or no?
You know, the process of insurance regulation in general is done at the state level.
Okay, so therefore you would not be willing, you're not going to do that?
Well, I think state regulators, like federal regulators, aspire to best practices. So if there are best practices, that's what I would hope the states would use.
Okay, quick question with regards to the SIFI designation, G-SIFI situation. We have three companies, and for the life of me, I mean, I was an insurance agent for 35 years. I was in the banking business for 35 years, and I have, for the life of me, can understand how you can have an insurance company that's systemically important. I realize they think they're important, but how can they economically bring our economy down? Since you're the chair of the FSOC, Mr. Secretary, what is the criteria that you used to determine those three insurance companies are systemically important, enough to the point where you would bring the entire economy down?
Well, Congressman, as you know, in the case of each of the designations, there's hundreds of pages of analysis that support...
Do you have some criteria, I guess is my question.
I mean, the question is, are there transmission channels where the failure of one of those firms could lead to broader financial problems? And in the cases of each designation, after a detailed review, we reached the conclusion the designation was appropriate because that was the case.
Okay, if you've designated them and we haven't really listed the criteria. You're just looking at the whole thing as a whole. Is there a way to de-designate?
Well, no, I'm not saying we didn't list the criteria. We have detailed analysis. It's hard to answer in 30
But
seconds.
you don't have a set of criteria. You just sort of analyze it and just sort of say, well, it looks like it may. Well, do you have a set of criteria that you actually go down and check a box or list?
Well, I think I'd be happy to send you the public documents that we put out that go through in detailed analysis why those transmission channels were determined to present the risk. And in the second part of your question, the core activities of these businesses are what was the subject to designation. It's the scope of their activities.
Okay.
And
I got one more question real quickly. My time is almost expired here. This morning, in one of the political papers here in town, there was a headline that says that the Secret Service wants $8 million to build a fake White House to train. Now, Mr. Secretary, please tell me we are not going to spend $8 million to build a fake White House to train when we have movie sets, we have all sorts of military bases around the world. We can build virtual reality sorts of video games that can do all this. Please tell me we're not going to spend $8 million to build a fake White House.
Congressman, I can't comment on what the proper training practices for the Secret Service are.
Are you going to raise their, let me put this, are you going to raise their budget $8 million to do something like this?
I don't have responsibility for the Secret Service. It was moved from the Department of Treasury to Homeland Security, so
Okay.
it's just not in my...
Time of the gentleman has expired. The chair now recognizes the gentleman from Massachusetts, Mr. Capuano.
Thank you, Mr. Chairman. How you doing, Mr. Secretary? Happy St. Patty's Day.
And to you.
Mr. Secretary, I got one issue I want to pick a bone with you on, but before we do, I want to clear up a few very important things. Did you ever read Secretary Clinton's regular mail?
No.
Did you
mean,
check it before it came in, see who was writing her and what was in there?
I mean, only if she needed me to look at something.
So after the fact. Did you tuck her in at night?
I certainly did not.
Did you make sure she brushed her teeth?
Do you really want me to answer these questions?
I just, I mean, if we're going to ask ridiculous questions, I just figure we may as well go to the logical extreme of absurdity. Let me ask you a different issue. Well, we'll get off that one. I think I kind of made the point.
You made your point.
Have 47 members of Congress of either branch, because I wouldn't want to knock one branch over the other, have they ever written to the FSB to say, don't talk to you?
I'm not aware of it, but
Have 47 members of Congress ever written to the international insurance supervisors and said, don't talk to the Secretary of Treasury?
Yeah, I'm not aware of it.
Have they ever written to ISIS and said, we can't believe the Secretary of the Treasury is trying to do something to contain you?
And not to my knowledge.
Not to mine either, but if they do, would you let us know? Because I'd like to know that, members of Congress think that you shouldn't be doing your job by talking to people on an international basis. But I do want to talk to you about one issue, and that's Fannie and Freddie. And I know we've had this discussion briefly before, and I hope that you expect it to come up. Since Fannie and Freddie went into receivership, the federal government, they borrowed $187.5 billion from the taxpayers. Very important, very difficult, very risky. But since that time, they've paid back $225.5 billion. That's about a $40 billion profit, give or take 20% rate of return. Could you tell me what you've done with the $40 billion that you've gotten back beyond what the taxpayers lent?
Well, Congressman, as you know, it becomes part of federal receipts.
General fund.
And general fund, but...
so that it goes in the general fund, and we, Congress, and you, the administration, the normal course of events, get to spend it any way we want.
As a practical matter, it's part of what's helped us reduce our overall deficit.
I understand. I mean, more receipts is fine. I think the other side has problems with more receipts, not me. But I get that. But basically, it's come into the general fund for all intents and purposes, and we've spent it on whatever we wanted, which is fine. That's not the issue. I'm not chasing that. That's a different debate. But that $40 billion, that's only the beginning. What has Fannie and Freddie been allowed to pay down on the $187 billion that they originally borrowed?
So, Congressman, I think that the idea that they're kind of out of the woods.
I didn't say that. I'm
they're still in
asking what's
conservatorship.
happening with the money.
You know, they're still a federal guarantee behind Fannie and
I
Freddie.
understand that, which I actually like and
Yeah.
appreciate. Some of my colleagues don't, but I do.
And the exposure the taxpayers have until there's housing finance reform and we move to a system.
Fair
beyond
enough. How
Fannie and
much has
Freddie
Fannie and
remains.
Freddie, what kind of capital reserve have Fannie and Freddie been able to build up?
They have not built up a capital reserve.
Because we're sweeping all the money out and putting it into the general fund and spending it.
But
Is that right?
until we move to a system beyond the current one, taxpayers are ultimately responsible.
But
and
that's been the
that's
case since
reason.
day one. That's been the case since the 1930s. Taxpayers were on the hook at every time. And they had a blip, and the taxpayers stepped in, as we had promised we would do for 80 years, and now we've been paid back. The question I have is, when are we going to stop using this as a piggy bank?
Well, I
know
don't
that
think
we
it is
have
a
to have a debate about reforming Fannie and Freddie. But all right, if that's the case, what's the administration's proposal on how to move forward?
Look, I think that the important question is how do you move forward on housing finance reform? We have very much wanted to move forward. We think it's an important priority.
Have
I
you
think
submitted
that-
a proposal that I haven't seen?
Well, we work closely in the development of proposals, particularly on the Senate side, and have been engaged in trying to think through with others how to
But
move
those
forward.
aren't moving forward, as we clearly
So
both know.
I don't disagree that progress has been slow
If
and
that's the
limited.
case, how long are you going to keep holding Fannie and Freddie hostage? Because the reason I ask, it's not about Fannie and Freddie, it's about homeowners. By holding them hostage, number one, you're not allowing Fannie and Freddie to capitalize. Number two, you're not allowing any funds to be left over for the Housing Trust Fund. And number three is you're basically submitting homeowners to an additional tax for the purposes of general revenue, which doesn't sound fair to me. General revenue should be paid for by the general people.
I don't agree with that analysis in terms of the impact on homeowners. I do think that that there is a very serious question that as long as Fannie and Freddie are in conservatorship,
But
there
they're in
is a public
conservatorship because you
exposure.
won't let them out.
Well,
You won't let them pay off their debt.
There is, I think, the need for housing finance reform in order to move
If
beyond
one of my
the current state.
constituents were to loan me money and not allow me to pay that back, what would you call that?
The time of the gentleman has expired. The chair now recognizes the
Chairman, I have-
gentleman from Wisconsin, Mr. Duffy, Chairman of the Oversight and Investigation Subcommittee.
Thank you, Mr. Chairman. Good to see you, Mr. Liu. Just to follow up on Mr. Capuano's questions, the international insurance advisors are not seeking nuclear weapons, are they? And in regard to making sure that Hillary Clinton brushes her teeth, you're not the tooth fairy, correct? But in regard to emails, you were the Undersecretary of State for the management portion, right?
Well, I was Deputy Secretary of State. The Undersecretary of State for Management was another position.
And maybe we can put up an organizational chart of the Secretary of the Department of State. You actually reported directly to Hillary Clinton. Is that correct?
Correct.
And it's fair to say that there's many modes of communication, but one of them with the Secretary was via email, right?
Correct.
And is it your testimony today that you never noticed that she wasn't sending email or you were corresponding with her via a .gov account? That you never realized that it was a Clinton email account?
Congressman, I can answer the same question again.
I'd like that.
Yeah, my general mode of communication with the Secretary was meetings and phone calls. I did email with her from time to time. I don't remember exactly how it showed up.
I want to be very patient, but I would ask. I mean, President Obama has indicated this is going to be one of the most open and transparent governments we've ever seen. And as one of his representatives, I would ask that you actually respond to the question, which is, did you ever notice that you were corresponding with Secretary Clinton on an account that was not a .gov account?
Congressman, I always...
Did you ever notice that, yes or no?
I always made sure I was corresponding with the right person.
That's not my, listen, you're very good at this, not answering questions, and I appreciate the way you tap dance, but I think everyone in the room understands my question, and you're just not answering it. Did you know that you were corresponding with Secretary Clinton on an account that was not a .gov account? Yes or no?
Congressman, I don't remember giving it a lot of thought at the time.
That's not whether you gave it a lot of thought or not is not my question. The question is, did you know you were corresponding with her on an email that was a
It's
Clinton
it's a
email?
long time ago.
So you saying you don't remember? Is that your testimony?
I'm just telling you.
Is it your testimony that you don't remember?
I'm just telling you that when I emailed with people, I always make sure.
So is it fair to say you don't want to answer my question, Mr. Secretary? Because you know the question I'm asking, and you're refusing to answer it. So I guess what I'm assuming is you knew you were corresponding with her on an account that was a non-official account. And I understand you don't want to lie to Congress, and I appreciate that, and you don't want to be part of a news story. I appreciate that, so you don't want to answer my question. But I think all of us here understand that you're saying, I knew that it was a non-official account. I just don't want to tell you here. Is that right?
Look, Congressman, I've always endeavored to do my business, in an open way.
And again, non-responsive. But let me ask you, do you use for official business your official account, or have you ever, let me strike that, have you ever used a non-official account for official business?
I use my official email for official business, and follow all the
Have you ever used a non-government account for official business?
The only time I ever would use my personal account is if for some reason I couldn't use my
Have you ever used a non-government account for official government business?
On occasion, consistent with common practice, if I can't use official email, I have, but it's not at all a regular occurrence.
Let me, and I think this is an important issue. Let me give you a quote, and let me see if you can tell me who gave this one. Any unauthorized disclosure of classified information is a violation of our law and compromises our national security, and that our national defense requires that sensitive information be maintained in confidence to protect our citizens, our democratic institutions, and our homeland. Protecting information critical to our national security is the responsibility of each individual who is granted access to classified information. Do you know who gave that quote?
I do not know who gave that quote, but you're going to tell me.
I'm going to tell you it was you. You gave that quote. That was yours. And I would hope that we have laws in place that apply to everyone in government, not just a few in government.
To be clear, classified information can't be communicated over a normal official email either. It has to be on a classified system.
Do you suspect that the Hillary Clinton email, clintonemail.com, is as secure as the .gov email system?
Look, there are others who are more expert looking at that. I defer
But your
to them.
opinion?
It's
possible?
I'm not going to comment on something I don't really have the knowledge to comment.
Being an operations guy, the COO, on the exit form that every State Department employee is to sign, were you pretty certain that everyone who exited the State Department would sign that appropriate documentation?
I would assume it would be normal practice.
Okay. I yield back.
Time of the gentleman has expired. The chair now recognizes the gentleman from New York, Mr. Meeks.
Thank you, Mr. Chairman. Mr. Secretary, I was at another hearing, and I walk in here and I'm confused. What's your title again? You are the Secretary of what?
Treasury.
Treasury. And you came here to talk about the Treasury and the economy. Is that not correct?
This is a hearing on international financial institutions, Congressman.
And that is significant to the people of the United States, right?
I think it's very important.
And, well, by the way, maybe because our economy has recovered, has it recovered substantially since 2008?
It has recovered substantially. We're on the right path. We still have more work to do, but the rest of the world is now looking to us as an example of how you bring yourself back.
And the unemployment rate now must be very high.
Well, it's as you know, in the mid-fives.
Oh, so maybe other folks don't have anything to talk about in regards to the economy and what your job really is. So maybe they're trying to talk about something else since they have nothing of substance that affects the economy of our country to discuss with you, Mr. Secretary of the Treasury.
I'm happy to discuss the economy for as long as you'd like.
Let's get to what I think that you're here for, and you're here to talk about it, because I think being the Secretary of the Treasury, and it affects the American people, how we're going and where we're moving, I think that's substantial. And for me, I want to just ask some questions which I think would be relevant. I know that the ranking member was very involved and concerned about it, and I think a few other members, and that's about anti-money laundering issues. A number of banks have faced heavy fines levied by the Financial Crimes Enforcement Network recently. And, Mr. Secretary, what should we make of the larger number of banks being deemed in non-compliance with our anti-money laundering regulations?
Congressman, the anti-money laundering rules are very important. It's the way we make sure that illicit activity is caught and stopped. I think that we have been aggressive and effective in making the law well understood and in underscoring the importance of having compliance programs. I think that what we've seen in recent years is a kind of risk aversion developing where financial institutions have been, if anything, going beyond what may be required. They're not required to stop doing business, say, in a country where there are problems. They're required to have the kind of compliance program where they can catch problems and prevent having problematic transactions. So I think that there's kind of two halves to this. What is the part that we control? What is the part that financial institutions control? And we've worked hard to communicate both with financial institutions and internationally with our counterparts abroad to make sure that systems are in place where we can both have very tight standards on stopping illicit money activities, but also have a system where financial transactions can continue.
So do you think that the banks are putting enough effort and resources into this?
Look, I think they're putting resources into it. I think that they need to look at what the proper compliance program is, so that they can remain engaged in important areas of commerce without opening the door to prohibited activities.
So Jilly, you used the phrase that you need to know your customer. Mm-hmm. Do you think the bank should also know their customer's customer?
Well, they're responsible for where the money is coming from and going to, banks know what are suspicious transactions that should raise attention, and we work closely to make sure it's clear what is required of them.
Let me, in the little time I have left, because I just came back from Asia and. I was looking at the president's proposals for TPP and some of his trade agenda, and there's things that are propping up, and I know you've had some questions already about currency manipulation and whether there should be a currency chapter in TPP. I didn't hear your answer, but
I didn't get much of a chance to answer.
Go ahead, please.
We are very much of the view that unfair currency practices have to be stopped. We engage in the multilateral processes at the G7, the G20, at the IMF. We engage intensely on a bilateral basis to try and bring behavior up to a level that meets what is the broad international standard of market-determined exchange rates and only using domestic tools for domestic purposes, not to gain unfair advantage. My view on whether it belongs in a trade agreement is separate from how aggressive we are at pushing back on practices that we think are unacceptable.
Time of the gentleman has expired. The chair now recognizes the gentleman from California, Mr. Royce, Chair of the Foreign Affairs Committee.
Thank you, Mr. Chairman. Secretary Lew, good to see you again.
See you.
We are just back from a trip to India, China, and Taiwan, and I just thought that I'd give you a quick read there in terms of some of these issues that you're working on. We had a good meeting with the Prime Minister, Modi, and the momentum there is headed in the right direction. Last Thursday, the Indian Parliament approved this new bill that raises the ownership caps for foreign insurers, for example, to 49%, while also allowing foreign reinsurers to open branches in India. Now, that's long overdue. It's definitely good news. In China, the news is a little more ambiguous, and it was clear from our visit to Shanghai that American businesses continue to expand in China, just as China you can read the headlines here, have that appetite for investment in real estate, and even tech companies like Lyft and Snapchat. That continues to rise. But U.S. firms continue to compete on an unlevel playing field in China with very, very serious limits on ownership and ownership there. The regulatory pressures are significant. China recently introduced this bank technology rules and draft counterterrorism law. I know they say it's on hold, but they say it's scheduled in due time. So I need to ask you about that. It's definitely a move in the wrong direction. It would force U.S. firms to use domestic Chinese technology vendors, as you know. Yep. It would limit cross-border data flows. It would expropriate intellectual property as a result of this law, and you'd have a lot less access for U.S. firms. One of the other troubling aspects of it is it would require our technology firms, especially financial services, to hand over encryption keys, the passcodes that help protect data, and it would install those security backdoors in their systems to give Chinese authorities surveillance access. So this is a new challenge. I want to ask you about that, and I also want to ask you about the progress on the bilateral investment treaty in China. You've got 18 rounds of negotiations that have taken place, and of course my focus is on what could be done in terms of this arbitration issue, which I think would give us a real chance to make sure that we've got a mechanism outside of the court system there to resolve differences if we can push hard enough on that. So if you could tell me about that and maybe ownership caps in the agreement, I'll turn the time over to you here.
Well, thank you, Congressman. I was also in India recently and met with the finance ministry and with the prime minister, and was encouraged at the direction that they're moving in, both in terms of opening up markets, but also in terms of making clear for American businesses how tax issues will be resolved and other things that have been a real obstacle. A long way to go, but
how about the arbitration issue in China?
So on China, you raised the issue of the technology requirements. As I think you know, we have made very clear that we think that this is a very problematic set of proposals that they put forward. I, together with the Secretary of State and the U.S. Trade Representative, wrote to the Chinese leadership to make clear that we thought that they needed to stop that from taking effect. I have engaged personally with my counterpart on it. I think they're very, very troubling. This is not the first issue to come up. The anti-monopoly law last year was a similarly troubling issue. What I can say is that we are engaging on it, and if they want to maintain the kind of progress that we're making in the U.S.-China relationship, they have to hear the concerns we're raising. That can only be done by bringing the issues to bear, and to do it through channels where there's the ability to communicate effectively back and forth. On the BIT, they are in a matter of days, I think, certainly in a matter of weeks, supposed to be providing the first major documentation, which will be their so-called negative list, the businesses that will be closed.
I'm familiar with that, but I'd like to just get back with arbitration.
Yeah.
You need to strenuously push this concept, because if these things get decided in the courts in China, that's not a fair way to do it.
Yeah.
If you can have third-party arbitration, you can have these commercial settlements handled effectively. Is that going to be part of the agreement?
Congressman, I have to check on the arbitration issue, but I
make
will
certain it's in there.
Yeah, I will say that in general, the engagement on the BIT is a question of, can China rise to a standard that's high enough that meets our requirements so that we can enter into a BIT? Hopefully, it's an attractive enough proposition that they will rise to that standard. If not, there won't be a BIT.
Time of the gentleman has expired. The chair now recognizes the gentleman from Texas, Mr. Green, ranking member of our Oversight and Investigation Subcommittee.
Thank you, Mr. Chairman, and thank you, Mr. Secretary, for this appearance today. Mr. Secretary, let's talk for just a moment about Dodd-Frank. I believe it to be an exceedingly important piece of legislation. Would you kindly give some indications as to how well it's performing, and some indication as to how Dodd-Frank could have made a difference when we went through the 2008 crisis? As you know, AIG was styled an insurance company. Could you please elaborate to some degree,
Congressman, I think that we have made an enormous amount of progress making our financial system and the global financial system safer, and therefore the economy safer. We have taken action that raises the capital held by banks so that they are able to absorb, and financial institutions that are significant, so that they are able to absorb the risk that they're taking on. We have put in place consumer protections that didn't exist before to prevent the kind of practices that kind of metastasized in the pre-financial crisis days through the subprime lending problem. I think that if you look at the kind of back end, when institutions hit a difficult time, we've put in place resolution practices through both procedures like orderly liquidation authority and resources like the orderly liquidation fund to make sure that insurers like the FDIC can manage without having to turn to taxpayers for the kind of support that was required in 08, 09. I think internationally, we have worked to try and bring global standards up to where U.S. standards now are. I know that this committee asks a lot of questions about the FSB, but what the FSB fundamentally is, it's a way for us to drive the conversation internationally so that it won't just be the United States that has high standards, but there'll be high global standards, which is so important. I think we still have a lot more work to do. I think that the idea that you ever finish is probably not attainable because the financial system doesn't stop moving. It doesn't stop evolving. The next problem won't be exactly what it was in 07, 08. It's why we ask questions about things like money market funds and asset managers and other things, not because we assume that there's a problem, but because we know that if there is something that presents a kind of risk that should get our attention, we need to ask the questions in advance. The fact that there is an FSOC, the fact that there is a council that brings together all of the relevant regulators and authorities to ask the question, what do we need to be thinking about to make sure that we protect financial stability? It didn't exist before. We now have that. We put out an annual report that lists in detail what we think the concerns are, and I think that the system is enormously more safe than it was before.
The Consumer Financial Protection Bureau, one piece of the puzzle. Would you just give some indication as to how important it is?
Well, Congressman, I think if you look at the work they've done, you look at the clarity with which mortgage documents are now prepared so that an individual middle-class person, a working person who's taking out a mortgage can actually understand the transaction they're entering into. Enormously important. The fact that you can't do things like low doc, no doc, loans, fees that are hidden, costs that explode in a way that you didn't understand when you were signing on to a loan product. I think that they have done enormously powerful work in that and many other areas. And I think notwithstanding the critique in some of the halls here, if you go to the communities, both of consumers and institutions that they deal with, there's a lot of respect for the quality of work that they've done.
How important are living wills for SIFIs?
Living wills are very important. Living wills for the largest institutions actually give you the ability to know if they were to hit the crisis point, do they have the ability to work out their problems on their own? It's why the review of living wills is such a serious piece of business, and it's hard. These are complicated organizations, and the fact that it's taking some time to get them hammered out shouldn't be particularly surprising. Having them in place will make the system incredibly more safe.
And you've indicated that all legislation, and you've not said this directly, but legislation can be improved upon. Are you amenable to working with Congress to make improvements?
Congressman, I've always been open to working with Congress to make the kinds of legislative changes that would improve financial oversight, improve the soundness of our system. What I haven't been open to is questions about whether the basic approach should be reevaluated or reversed.
Thank you, Mr.
Time of the gentleman has expired. The chair now recognizes the gentleman from Oklahoma, Mr. Lucas.
Thank you, Mr. Chairman. And Mr. Secretary, we've discussed a wide variety of topics today.
We always do.
Which is a good use of time, and always insights are gained. I'd like to focus back for a moment on issues that I think impact the economic viability of my district and much of the country. Rarely do I quote researchers at Harvard, but recently a report came out, a study looking at the effect of Dodd-Frank and recent changes in the community bank's, quote, market share since the implementation of Dodd-Frank, and even looking back before that since 2008. And it was a little bit alarming in that it noted that the community bankers' market share, which had been declining since 2008, had actually accelerated. Some might even use the phrase doubled in the time since it was enacted. Now, of course, Dodd-Frank was designed to protect all of us from the two big institutions that many of us would agree in this room almost brought the economy to its knees in 2008. But with the implementation of Dodd-Frank, it seems that the small institutions, call them community banks, $1 million, $10 million, $1 billion, $10 billion, $50 billion, whatever, the smaller institutions seem to be squeezed the most by what's going on and have the greatest barriers to trying to continue their business or to enter the marketplace. So I guess my question to you, Mr. Secretary, is, and save me a little bit of time for one more question, my question to you is, based on what we're seeing happening in the community banking segment of the financial markets, is it time either for regulators to use some of the flexibility given to them in Dodd-Frank, or perhaps if that's not possible, it's time legislatively for Congress to respond and try to provide some relief to the community banks, the people who didn't cause the problem that Dodd-Frank was the answer to? Or as we'd say in Oklahoma, is it time to save the people we saved?
Congressman, I think if you look at Dodd-Frank and the implementation of Dodd-Frank, there has been a great deal of attention paid to treating community banks differently, and appropriately so, from the larger money center banks. I think, as you've noted in your question, the trend of consolidation preceded the passage of Dodd-Frank. And I haven't read the Harvard study you're describing, but I'd be happy to look at it and give you a response after I've looked at it. I think, you know...
Please do. It describes an accelerating...
You have to look at what was happening to that trend and whether it would have accelerated anyway, because it was accelerating before. If you look at consolidation, it's not just at the smaller level. It's happened in the large institutions as well, not for necessarily good reasons. You had a lot of troubled institutions that had to be taken over. So I think that the challenge we have is to always be mindful of the fact that you can't treat a Main Street bank, $5 billion bank, the same as a regional bank or the same as a money center bank. We've tried not to. We're always attentive to how we can do better, and we have a lot of flexibility, and the regulators have a lot of flexibility.
But the net effect, Mr. Secretary, appears to be an accelerating deterioration in the community bank's market share, a reflection of what they're trying to cope with and deal with. That ultimately has an effect on the consumers with less access to credit, higher cost for credit, fewer general choices. At some point, this body, or you, one, have to respond to save the people we save.
Well, I do think that there's a difference between the consolidation of community banks and whether or not there's a loss of access, because that consolidation process has been happening, and they remain community banks. But I'm happy to follow up on this question with you, Congressman.
One last question, and since we're talking about the state of the international financial system, another topic that is simmering along in this body, which is one of our institutions that work with businesses in this country as they enter into international interactions. Offer us an insight or two on the relevance of the Export-Import Bank as it comes to U.S. participation in the financial markets.
Look, I think the Export-Import Bank plays a hugely important role. Right now, we have a global system where all of our competitors have export financing support. The idea that the United States would kind of unilaterally disarm in a world where other competitors have export financing programs would put U.S. manufacturers, U.S. exporters at a great disadvantage. I think there's a kind of a notion that it's only large firms that benefit from the Export-Import Bank. That's wrong. Just the other day, I was in Baltimore at a small business in Baltimore that said the most important tool it has to access foreign markets is the Export-Import Bank. I think you can go through the districts represented on this committee, and you'd find countless examples of small businesses that are benefiting from the Export-Import Bank. I hope we can work together on a bipartisan basis to renew the Export-Import Bank before the end of June when it expires, because American businesses deserve our support. If there were an international agreement to lower all export subsidies, that would be a different story. We're working with the international body that this Congress helped create, but we're not there yet, and unilateral disarmament would be wrong.
Thank you, Mr. Secretary.
Time of the gentleman has expired. The chair now recognizes the gentleman from Missouri, Mr. Cleaver, ranking member of our Housing and Insurance Subcommittee.
Thank you, Mr. Chairman. Mr. Secretary, thank you for being here today. I've had the opportunity to go to Cuba twice over the last 3 years, and it is my hope that that nothing that we do here will sabotage this possible bridge from the U.S. to Cuba. The Americans can go to North Korea, we can go to Russia, we can go to Venezuela, we can't go to Cuba. And the sad part about this, is, at least as far as I'm concerned, is that we're missing out on trade. I think the Netherlands and Canada are the chief trading partners with Cuba. And I think I have one company in my district, Cargill, that does business in Cuba, but other businesses are struggling with trying to find out what's going on with the normalization process so that they can try to do business in Cuba. But there are some problems. One, I guess the Ex-Im Bank is not presently guaranteeing loans to do business in Cuba. So therefore, a lot of companies are going to be hesitant to do business with a country that's considered to be unstable without Ex-Im participating. Is that an accurate assessment on my part?
Congressman, the action that the administration took obviously was to try within the law, within the authorities we have, to remove restrictions that we thought were counterproductive and, if anything, working against the goal of getting the kind of change in Cuba that we all want, which is movement towards giving human rights and other issues of importance greater attention. I think that the transactions between U.S. and Cuban parties will be governed by law. So there will be things like food sales. One of the things that changes is that the payment terms will be easier for companies to comply with and for the purchasers to comply with. So I think that there will be some benefit to U.S. firms doing business in Cuba, but we haven't opened up all of the normal forms of support that exist in countries that we have normal relations with. We've been clear that Cuba still has a long way to go to make the changes that it has to make before we'd have that kind of conversation.
I agree that we're not there yet. In 1993, Cuba actually made the U.S. dollar legal tender. And then in my first year in the House in 2004, Cuba then placed a 20% surcharge on remittances, dollars coming into Cuba, which created, I hate this term, I don't know how to use a human being, but the term they use is mules, carrying U.S. dollars into Cuba illegally, and giving it out to their relatives, which I completely understand. But with this going on, is there any? I mean, I don't want to know about the negotiations. I'm not going to ask you about negotiations in a public hearing, but it would be my hope that there is something being done in terms of remittances as we move toward normalization. Is that something that you're
In the steps that we took, among other things, there was some easing of travel restrictions and remittances, so that that would be easier for families. But as importantly, telecommunications has opened up because exposure of Cubans to the West, to the United States, to our values is part of what we think will bring real lasting change in Cuba.
You know, Western Union, actually you can send remittances through Western Union. But the concern is what I think it's a pretty heavy surcharge on U.S. dollar. My time is running out. Thank you, Mr. Chairman.
Time of the gentleman has expired. The chair now recognizes the gentleman from New Mexico, Mr. Pierce.
Thank you, Mr. Secretary.
It's hard in this room to know where to look.
Okay, just further to your right than you'd think. The, but not all the way, as Mr. Morvan said. The IMF broke its longstanding rules, according to the Wall Street Journal, and just an inspection of the loans or bailouts, ever how you want to say it, to Greece. Would you be willing to commit today to reinstating those previous principles that were bypassed in the deal with Greece?
Congressman, I don't think I would agree with that characterization. I think the IMF did have an exceptional access program.
Okay,
for
well,
Greece. But that's something
you'll have to fight that out with people who say that you did.
Yeah, I think that if you look at what was going on at the time, if the IMF had not stepped in, the risk of contagion to the European and the global economy was quite severe.
Yes, and it still is, frankly. So what's your stance on the oil export ban? Do you have a stance?
I'm sorry.
The oil export ban for the U.S.?
You know, it's actually a matter that's not directly in my area, so I'm
You don't have an opinion? Yeah. I mean,
I try to comment on the things that I'm responsible for.
Well, Mr. Secretary, we just heard my friend from New York say that you are the Secretary of Treasury, the Secretary of Treasury who's come here to talk about our economy and to talk about the world economy. And it'd be nice if you had an opinion. I think with all respect, sir, I have an observation to make. I'm reading your written statement, and it's replete with considerable progress in the rainbow stew that is characterized in the report of the world economy and our economy in general. But when I Google this morning, I see that manufacturing is down in February. Another article comes up, manufacturing in New York is down in March. Another article said wholesale prices in decline for 4 months. So as the Secretary of Treasury here, to tell us about the economy, it would be nice if you told us some of those dark clouds instead of the sunny horizon that have been painted here. And so I find the lack of transparency in the report that you've issued to be stunning. In fact, one point you said that we should, in answer to a question by one of my friends on the other side of the aisle, that we should teach the world about good policy. Now, we did teach the world about good policy because when we started printing money, the quantitative easing after 2008, a policy that improves your economy in a philosophy called beggar thy neighbor, the world economy has learned that really well. In fact, that's what's driving our value of our currency up today. And so just today I'm Googling and I see that companies across America are being devastated by the race to the bottom that we taught the rest of the world about economic principles. And with them printing money and our value of our dollar is increasing dramatically, the losses that are being passed on to American companies are being felt right now. And so that would be a critical piece for you to be relaying to us, but I didn't hear anything about that. And so, Mr. Secretary of the Treasury, that would have been a nice thing that you put in here.
Happy to,
with all respect, I only have, I'm just making observations here at the end of the day because we have people pointing out that there is nothing to talk about in the economic situation. But in the whole deal, much of the report goes into IMF and our responsibilities to the IMF.
Nothing in your report says that the whole game depends on the Europeans, primarily Germany, to keep bailing out Greece. Now, the finance minister for Greece just recently made a comment that we ought to tear up the whole agreement. Now, that is causing, yes, just on the 13th of March, it would have been nice if your report said on the 13th of March, the German population switched pretty dramatically to where they don't favor Greece getting any more bailouts. In fact, they want Greece out of the EU, which then sets up the prospect that other nations who are financing the sovereign debt for Europe would be extremely cautious about loaning to Italy, to Spain, to Portugal, to those other nations. Those would have been nice things to have heard in this report about the economy, Mr. Secretary, and Mr. Secretary of the World Economy that we heard that you're here to testify about, but I didn't hear any of that. I'd yield back, Mr. Chairman.
The chair now recognizes the gentleman from Colorado, Mr. Perlmutter.
Thank you, Mr. Chair. And to my friend from New Mexico, I'm going to give the Secretary a chance to talk about that economy. And so I'm going to start with and hopefully it's a little closer so you can see it, sir, a slide from the Federal Reserve economic data chart. And what this is civilian unemployment since 1970. And I've circled the last few years in terms of job losses in 2008, coupled with job gains since then. Would you care to comment? And I also have, this is for the United States as a whole, I have another slide, Mr. Secretary, that is for Colorado, where we suffered the same as the United States generally, where our unemployment went sky high in 8, 9, started coming down under the Obama administration, and is now down to about 3.5 or 4%. So, Mr. Secretary, would you like to comment on job growth?
Thank you, Congressman, and I do appreciate the chance to comment because undoubtedly there are economic statistics that go up and down month to month. There's a variety of them. There's no denying the trend of the U.S. economy over this last year has been very strong growth. For several years, been strong employment growth. You compare the United States to Europe or to other parts of the world, we're growing better and we're creating more jobs than most of the developed world put together.
All right.
Now, I think if you ask the question of why, I believe it's because, as I said earlier, we have a flexible and resilient people, and we responded with policy that worked. And I realize that policy has not always been something there's been unanimous opinion about. I don't think the results are subject to question. We are in a better place now.
Let me give you another slide from Fred. And this is Dow Jones since 2005, and it shows a steady increase up to 18,000 from a low point of about 6,000 in 2008, early 2009. You want to comment on that?
Well, obviously, there's been a recovery in our financial markets where the losses from the Great Recession have been reversed. And, if you look at the trend, the picture you just showed, people had their retirement savings restored. Investors got back what they lost. We've seen in housing that property values are starting to come back up. There are still areas where it's not fully there. Where we've seen a problem is that income growth has been slow to come back. The last year we've seen about 2% growth in wages. That's good, but we'd like to see more. We're starting to see some pressure on wage growth, which is a good thing. For those of us who came of age in the 70s, 80s, rooting for inflation does not feel like a natural thing. But too low inflation is not a good thing. I mean, everyone is now shooting to get to 2%, and 2% is hard to achieve.
All right, let me give you one more slide. And this one is on 30-year conventional mortgages, which have seen a continual decline to the benefit of homeowners who are in a position to take advantage of them, down to about 3% or 3.5%.
There's no doubt that the affordability of mortgage finance has stayed very much within reach in terms of historical standards. The challenge, as we were discussing a bit earlier, is that the process of qualifying for a mortgage has been too challenging for some. I think
Let me change the
the
subject.
good news is that it's still a market where mortgage financing is very affordable.
Let me just change it to some place where I think there are some headwinds, and I'd ask you as the Secretary of Treasury to watch out, and that is in this tremendous drop in oil and gas prices, which I come from Colorado, so we're an energy-producing state. We've seen some layoffs. Now, I think our economy is strong enough to move forward through those layoffs, but there is, within the energy sector, a lot of concern. And, there are a number of ways to deal with it. I would ask that your agency, your department be, mindful of this, whether or not we may want to put some kind of a tariff and be protectionist for our local industry. I don't know, but I'll let you respond.
Without a doubt, if you look across the whole U.S. economy, lower energy prices have actually been a shot in the arm. It's been like a tax cut for most consumers and most businesses because everybody consumes and relatively few produce. Equally, undeniable is that there are pockets of the country where there's been a slowdown in economic activity as new rig activity has been slower.
Mr. Chair, I'd ask that the charts that I have be entered into the record.
Without objection, and the time of the gentleman has expired. The chair now recognizes the gentleman from Ohio, Mr. Stivers.
Thank you, Mr. Chairman. Mr. Secretary, I'm over here. By the way, I appreciate you recognizing the benefit of tax cuts just now. I want to talk to you a little bit about the economy and then community banks, and if we have time, we'll insurance standards and maybe what's going on at the DOL. But my local foundation, the Columbus Foundation, just put out a report that said 145,000 people in central Ohio, in my area, have been left out of this economic recovery because they've given up looking for work. They don't have the skills they need. There's a real skill gap. If you extrapolate that across the country, that means there's 11 million people suffering today, every day, even though the stated unemployment rate's going down. The U6 still says 11, so that's still a pretty big number. So I hope you're spending time focusing on those people that today are left out. And I'm not going to ask for comment on that, but I'm just going to tell you, I hope and pray that you're focused on that because these are great American people who are left out of our recovery, and I hope you'll spend a little time thinking about them. I do want to follow up on a question that Mr. Lucas brought up, or questions about the plight of community banks. I had a recent conversation with a lady named Linda. She's shopping for a house, and her local community bank stopped offering mortgages because they felt like the regulatory compliance was too heavy for them. They're a small community bank. And I wanted to kind of talk to you about, in your role at FSOC, so you've been there a little over 2 years as chair of the FSOC. I'm curious, how much time do you spend in each FSOC meeting talking about the plight of community banks and this idea of trickle-down regulation and how you can make sure that these consumers like Linda can get access to products at their local community banks? And my district's half rural. There are no big banks in major swaths of my district. It's community banks. And so if they're not offering residential mortgages, the people can't get them. So how much time do you devote to every FSOC meeting about the plight of community banks in round numbers?
It's kind of, I'm not sure I could give you a round number.
Is it on the agenda, yes or no, of every meeting?
I can tell you that every time we've discussed the housing finance system, every time we've discussed rules, whether it's at FSOC or in informal conversations that we have, there is a very strong focus on what is the impact on community banks. How do we distinguish between
Sure. Is it a standalone agenda item on every FSOC meeting? Because if it's not, I would just urge you to make it a standalone impact item of the unintended consequences on our community banks. Take that for what it's worth, and if you can do it, people like Linda across this country would benefit from it. I do want to switch to international insurance stuff. So, I'm from Columbus, Ohio, the Ohio State football team, the national championship football team. I want to use a football analogy for you. It has Team USA on the international insurance standards sort of taken a pause, taken a timeout to make sure we understand the impact on our domestic carriers of these international rules before we move forward and charge ahead of importing European standards for American companies?
So, Congressman, I don't think that there's any plan to just import standards from Europe. Our representatives participate in those to try to make sure that there are high standards around the world, but ultimately, U.S. authorities will make U.S. rules. National authorities will make national rules for the U.S.
Thank you. That's great. So have you conducted, as part of Team USA and these international insurance standards, an analysis of how these the potential impacts of the IAIS standards on domestic insurance industries in terms of financial, legal, accounting regimes that these U.S. companies now confront?
There is ongoing work on this, and I know that our office, insurance office, pays a great deal of attention to what the impact of any rules changes would be.
Do you do it in terms of what it means to policyholders and customers? Do you take it down to that level?
I think the analysis is broad. I'd be happy to get back to you.
Please do. And, again, getting back to people like Linda that I talked to, there are a lot of policyholders and a lot of consumers that want to buy insurance products.
Sure.
And any standards you make will affect their ability and their cost of those products. So I would urge you to really take a look at that. I only have 16 seconds left. Have you coordinated, or your department coordinated at Treasury with the Department of Labor on this standard, new fiduciary standard that DOL is proposing? Have they kept your labor folks in the loop and your policy?
We have been aware as it's gone through the process.
Would you call it coordination, or is it just informing you?
Well, there's been interagency discussion on the policy, but it's a Department of Labor rule.
Thank you. I yield back, Mr. Chairman.
Time of the gentleman has expired. Chair now recognizes the gentleman from Minnesota, Mr. Ellison.
Allow me to thank the chairman and ranking member, and Secretary Lew, thanks for your great service to our country. I've been talking about Somali remittances for quite a long time, as you know. But as you also know, we have reached a frustrating point. Back on February 6th, the bank that was doing most of the facilitation of international transfers stepped out of the work, and now we're pretty much at the end of the line. What can your office do to try to facilitate these remittances?
Well, Congressman, you and I have discussed this a number of times. I know the deep concern you have, and we're very sensitive to the problems that you're trying to address. I believe you had a discussion recently with our acting undersecretary and discussed the issue at some length. I think that the challenge is, and I don't think there's any disagreement on this, we all want to stop the flow of money to bad actors.
Of course.
No disagreement on that. I think we also all agree that people who are just trying to send money to their family members who are not bad actors, it is heartbreaking that they can't do so easily.
Forgive me, Mr. Secretary, but I must say it is heartbreaking, and I agree. But it's also, I think, a national security problem for the United States, and here's why. Because the narrative of al-Shabaab is the United States is your enemy. Look, they won't even let let your cousin send you some money for school fees or for food. Don't worry about it. We'll give you the money. All you got to do is be our soldier. That's another factor that I think we absolutely cannot ignore. It's a humanitarian crisis, but we are also playing into the narrative of a terrorist organization. And I would like it if you guys would start thinking of it in both of those ways, not just a humanitarian way.
I mean, the challenge is, while we strive to be clear, and we will work with you to be as clear as we can what the requirements are, what the rules are, we do not tell banks or financial institutions they cannot participate in this.
You know, Mr. Secretary,
but we also can't give a hold harmless to a firm at the same time.
Well, here's the thing.
So it's challenging.
Well, but see, okay, so we have a situation where we need some creativity. And that's what I'm asking you for.
We'll continue to work with you and try to be as creative as
well. Let me ask you this. There was a bill there was legislation that was passed that created a safe harbor, but was opposed by Treasury. In light of the difficulty, would you guys at least go back and look over a potential legislation that could allow these transactions to go forward and would prevent the money from going to terrorist organizations?
We will look at whatever proposals are forthcoming, including looking again at things that we've looked at in the past, and we will work with you to be as creative as possible. Earlier in the hearing, we were talking about financial institutions that are trying to avoid any risk by not by saying they're not going to do activity at all, as opposed to doing it in a way that complies. I think we have a challenge of making clear what the rules are, but that doesn't mean that it's saying no activity at all. Financial institutions are responsible for knowing what they're doing.
But you know what, Mr. Secretary, with all due respect to what you're saying, if you listen to the banks, they would say that we want to do the transactions, but the level of regulatory burden is just so high, and the level of so I mean, you're saying you're not stopping them, but they're saying it's more of a wink and a nod that you are stopping them. I mean, and you're in communication with these banks too, and so I find it a little bit frustrating when I hear our federal agency says, "Oh, we're not stopping them from doing transactions," but the banks say, "You're not saying we can't do them, but you're creating an environment where we can't do them."
The cases are not all the same, and I certainly don't mean to compare Mexico and Somalia, but we've made progress with Mexico, working with the Mexican government and the financial institutions, where they're raising their level of scrutiny so that they're able to avoid having the shutdown in correspondent relationships they were worried about. I think Somalia is a much more challenging environment, obviously. We will work with you on this issue.
I only got 35 seconds, so let me ask you this. I think one solution is to stand up a Somali banking system that meets international requirements to stop money laundering. We're sending them money for the AMISOM troops to fight al-Shabaab. What about sending them some financial help to set up a system where they can have a system that is trustworthy on international standards?
I'm happy to look at that.
Well, 7 seconds to go. I'm sure there's something I could be able to say. But thank you, Mr. Treasury Secretary. We'll be in touch.
Does the gentleman yield back?
Well, with my,
Non-existing time.
I think I'm over.
Gentleman yields back. The chair recognizes the gentleman from Tennessee, Mr. Fincher.
Thank you, Mr. Chairman, and thank you, Mr. Secretary, for being here today. The committee is very concerned that the U.S. laying many new mandates and going well beyond the international standards, whether on capital and the GSIB surcharge, liquidity rules, and many other areas. We are seeing effects of uncoordinated mandates on our financial markets and, in turn, in the real economy. The story is unfolding right before our eyes, starting with the so-called October 15th liquidity issues. To cite a few examples, a Bloomberg article dissected the issue, in it a senior executive at the world's largest asset manager, BlackRock, quoted, "The totality of the regulations have had a dramatic impact on the financing market." Another senior at global institution RBC noted that the liquidity is non-existent in volatile market, stating, quote, "We took that test October 15th and failed." The Wall Street Journal followed with a piece entitled, quote, "The Treasury market's liquidity is drying up." In it rather bluntly notes that, quote, "Bond trading desks have reduced inventories in response to regulations like Basel III and the Volcker Rule." Recently, a senior British regulator at the FCA noted that, quote, "There is enough evidence that low liquidity relative to previous years does not warrant careful regulatory monitoring of market developments and careful consideration of what could be done." And Bloomberg recently had another article entitled, quote, "The Treasury market's legendary liquidity has been drying up." It highlights impacts on, quote, "the U.S. cost to borrow and implications for, quote, governments, businesses, and individuals when they borrow." Rather directly, it cites, quote, "unintended consequences of new financial regulations which have been made bond dealers less willing to hold inventory and facilitate trades," and pinpoints Basel III and the Volcker Rule. Lastly, the nonpartisan and independent Center Financial Stability recently released a report on the dire situation entitled "Liquidity Shortage, Houston, We Have a Problem." It outlines historic drops in bank risk-taking and mark-making and stresses, quote, "The phenomenon starves financial markets from needed liquidity and is detrimental to future growth by exposing the economy to potentially unnecessary shocks. The reduction shows no sign of abating with a series of successive drops." Mr. Secretary, with this mounting evidence of all of these experts, when is it time to get worried? And what data-driven reexamination is FSOC and or the U.S. regulators doing on combined effects of regulations? Data-driven.
So, Congressman, I think the question of liquidity is an important one. Obviously, the liquidity of our markets has been a source of great strength. I think that a lot of the instant analysis on October 15th was not data-driven, and I think as we come to understand more about what happened on October 15th, we realized that it was a confluence of factors, and I would look forward at a point where we could discuss it at some length doing so. I think that what was going on was a combination of reaction to news of the day and off-risk decision making, and we're obviously looking at whether there were questions of liquidity. But I don't think jumping to the assumption that it was a result of regulation will bear out to be the principal explanation.
With all due respect, Mr. Secretary, and you're very knowledgeable when it comes to these issues, but these are experts that are dealing with this every day, that know their business very well, and they are seeing these things actually happen. And so what we're saying is, show us, where are we? So I think are we going to continue to just add more and more and more without having something concrete on, is this actually working or hurting?
I think on the broad question of is it working, if you look at the result of financial reform, we have made our system safer and more resilient. That is a positive that we're seeing benefits.
We have made our liquidity problem worse by drying up the market and not allowing banks to be able to loan money to people and help folks out. That's what's happening.
I think on liquidity, there are important questions, but there are a lot of things going on, including where we are in the business cycle and how new markets are developing, how new trading platforms are developing. And I think that it is just too oversimplified to say the only thing happening.
I've got 15 seconds. Would you be willing to just work with committee or provide us data-driven, just more than just out in space?
No, this is an important question. Obviously, 5 minutes is not enough time to exhaust it. I would look forward to doing that.
Thank you very much. I yield back.
Time of the gentleman has expired. Chair now recognizes the gentleman from Michigan, Mr. Kildee.
Thank you, Mr. Chairman, and thank you, Secretary Lew, for being here, and happy St. Patrick's Day. The high holy day where I come from. First, before I get to my question, I just want to reiterate something that I know I've raised with you and your staff regarding many communities, particularly in my state and particularly in the district I represent, that have been hit so hard over the last several decades that they have markets that are essentially not functioning because of the overhang of abandoned, empty, dilapidated structures for which there's no market and for which there's no market basis to come and take those properties down. There isn't anybody who will come in and take them out because there's no use for the property. And you have been quite willing in working with us through the TARP program, through hardest hit dollars, as you said earlier in the hearing today, to tailor the use of those dollars for the particular needs of these communities that have been, really struggling to kind of get their markets reset. And so I mention that only because obviously we have a bigger problem yet to solve. What we've been able to do with hardest hit has been very significant, and I would just like to ask that we continue to work together to try to find solutions to that particular problem.
Well, Congressman, I'm very proud of the work that we've been able to help the City of Detroit do in that regard. I think it's been very significant in the city's whole recovery plan, and have remained in touch, as you know, with the mayor to be of assistance and provide advice.
And I know we've had some discussions about HAMP. Hopefully we can continue those discussions. There might be a way to kind of get there as well.
Well, I wish I could be optimistic, but we're looking to see what we can do, and would like to see the City of Detroit be able to continue to remove dilapidated housing. It's had a hugely important effect.
I appreciate that. I know there's also been some conversation, and I have a question for you on currency issues. Coming from the auto sector and coming from communities that were so much a part of the development of the automotive industry, currency manipulation, particularly by Japan and other countries, results in us exporting our demand. And when we export demand, we export jobs. My hometown of Flint has gone from a high of 79,000 people working in the auto industry to about 10,000 now, and that's over just a period of a few decades, which kind of relates to the incredible problems that we face in trying to reset our markets. But I read something recently that I was concerned about, and I want to ask if you could comment. There's a New York Times piece that quoted, and I guess we'll see if it was accurately quoting you, as saying, quote, "We remain concerned that an enforceable provision," I'm talking about in the context of TPP, "that an enforceable provision on currency could have a negative impact on our ability to protect American workers and firms and set back our international efforts," unquote. And I guess I'm concerned about, from our perspective, the perspective I represent, when we think about trade is not the problem, trade deficits are the problem. And I see currency manipulation and currency management by our competitors as being not just an important concern, but the central issue when it comes to our ability to compete, particularly in the auto sector. And I wonder if you could comment, because it would seem to me that getting a deal shouldn't come at the sacrifice of what I would think is an essential element of a deal, and that is the ability to deal with currency manipulation. Could you comment?
So, Congressman, I think we agree that that countries that engage in unfair practices to gain unfair advantages need to be pushed back. We do that through the multilateral channels that we have at the G7 and the G20, the IMF. We do it aggressively on a bilateral basis. I think that if you look at a trade agreement and whether it should be an enforceable discipline in a trade agreement is a different question. There are legitimate monetary policies. I think QE in the United States, in other countries, has been a legitimate domestic tool for domestic purpose for there to be the kind of economic activity that could promote a recovery. I don't think those policies should be subject to trade review the way other issues are.
But frankly, I don't think any of us believe it. I don't think you believe that QE is tantamount to currency manipulation for trade purposes, the way we've seen other countries purchase other assets from other nations in order to do the same thing.
I don't, but I know that there are other countries that believed it was at the time. There are other countries that believed it was the United States gaining unfair advantage.
But even under existing standards, it wouldn't pass the test. So somebody might claim that. I guess my point is that
so you don't get to write the standards on your own, and the challenge is in a world where there are standards.
We don't write them. Frankly, we don't write them on our own. But we wouldn't sign an agreement that didn't have standards that we thought protected our practice.
The time of the gentleman has expired. The chair now recognizes the gentleman from Indiana, Mr. Stutzman.
Thank you, Mr. Chairman, and thank you, Mr. Liu. Good to see you again. Appreciate you being here. In your testimony, you said that the IMF is, quote, indispensable to achieving our economic and national security interests, end quote. You go on to talk about the ways the IMF and the World Bank prop up struggling foreign economies to help prevent extremism. This has been a reoccurring theme from the administration, that if radical Islamic terrorists had jobs, they would drop their weapons. Unfortunately, a quick news search and what we've seen on the news is that terrorists are actually highly educated young men and women from some of the world's most advanced economies around the world. So I question this jobs theory, and I believe that we should focus on shutting down terrorist financial resources by whatever necessary. I do agree with your former Undersecretary for Terrorism and Financial Intelligence, David Cohen, when he told the committee last year, your goal was to financially isolate the Islamic State. In your opinion, have we been successful?
I think we have made a lot of progress. I think that, as I was saying earlier, the challenge is they have internal sources of funding that are substantial. We're getting a lot of cooperation from our allies in Europe and in the region. We have more work to do. There are sources of funding within the areas they control that appear at the moment to be able to meet more of their needs than we would like. I think we need to continue to try to find ways, as David said, to isolate them, but not just isolate them, to cut off the funding they need to pursue what is really an evil agenda.
So how many Islamic State accounts have been frozen?
I would have to check. There aren't a lot of Islamic State accounts, so that's not really, I think, the measure. It's a question of whether or not we're stopping the transactions between parties that are doing business with them.
Do we know how many transactions we've stopped?
I mean, I know that if you look at the sources of funding available to ISIL, external funding is not one of the more significant sources over the last year. And that's why I'm focusing on the fact that it's complicated. It's not, I mean, we have tried to cut down their revenue from oil through a combination of working with countries that have the ability to stop the transactions, but also through military action that's disrupted a lot of the activity. I'm not saying it's 100%. They obviously have resources to continue. But if you look at where those sources are, a lot of it's coming from internally. Banks that are in areas that they control, where they go in and they loot the vault.
Do we have any idea, have any assets been frozen or seized or anything like that?
I would have to get back to you, but I'd be happy to.
Okay, could you, yeah, if you could get that information, I'd be grateful for it. I understand that Treasury is deploying new strategies to combat the Islamic State's new funding model. As you mentioned, oil, selling artifacts. Which of your new strategies has been most successful?
Well, look, I think if you look at the sources of funding, the external sources of funding have not grown. They're not getting the kinds of contributions that other radical and terrorist groups have gotten externally. It's not zero, so there's still more work to do. I think if you look at where they have been at exploiting the oil resource, it is a less significant resource than it was. I think that the challenge is they control large swaths of territory, and their tax system is not sending people letters.
But do we know? Do you have any metrics to measure how we're doing? I mean, because they need money, obviously, to fight this war against us.
We do, and I mean, we have a sense of what their budgetary and revenue situation is, and I'd be happy.
What is that? Do you have any idea?
First of all, some of it I would need to do in a different setting.
Okay, and then so I mean, this is how high of a priority is this for you?
It's a very high priority. I mean, obviously, the ability for ISIL to function is a question of, do they have the resources? I think we have to be realistic. As long as they're controlling the ground there, you're not going to dial down to zero their ability to have resources. We have to make it as hard as possible for them to get external support, and that's what we're doing. To the extent that they're controlling internal resources, some of them are kind of self-liquidating. If you take a town and you seize the bank and you empty the vault, it's empty. If they don't gain new territory, they don't gain new vaults. The part that is potentially kind of a continuing source of support is extracting money from people who live in the area, usually potentially at force. And that's something that is something we do have a real concern about, but that's not something we can do outside of the area.
Okay, thank you. If you could get us that information, I'd appreciate it. Thank you, Mr. Chilio.
Time of the gentleman has expired. The chair now recognizes the gentlelady from Ohio, Ms. Beatty.
Thank you, Mr. Chairman and Ranking Member, and I'm on your left over here. Thank you, Mr. Lieu, for coming today. The good and bad about being at the end of the line is many of the questions have already been asked and answered. But as I was listening to you, you said protect national security. And that reminded me, a couple weeks ago, I had several of the bankers in my district to come in from small, middle-sized, and large bankers to talk about many of the broad range questions that have been here today. But one of their common themes that they talked about was to empower cybersecurity and data breach protection efforts. And they wanted to make sure that Congress and members of Congress adopt a national standard for protecting sensitive consumer data, and I support this. As I recall, when you were here before, you also talked about the IMF being a powerful tool or promoter of national security. So when you think of what we're going through in this 21st century, cybersecurity is closely linked with national security. I don't think we'll get an argument from anyone on that. Can you tell me what efforts or things that your office is doing in conjunction with the IMF and other foreign counterparts?
We have a lot to do first on our own in the U.S. with both public and public-private coordination before we even get to the international question. We're putting a substantial effort into working in the financial services sector. We're the sector lead on cybersecurity at Treasury, in making sure that that the best practices are put in place. I believe that the National Institute of Standards, NIST's protocols are best practices. What we have found is that there's a real need to collect and share information. We've done as much as we can administratively to promote that information sharing. There's legislation pending that we think would be very beneficial to getting us to the next level of being equipped to deal with what I believe is a very profound threat in the area of cybersecurity. I don't know the CEO of a financial firm who doesn't spend a part of every day worrying about it. I don't go a day without worrying about it. It is a reality going forward that we have to put the effort in, both to doing what we can individually do, but collectively in a sector, sharing information so that we can find and remediate problems and prevent others from being hit if one has been hit. On an international basis, I think that we look forward to sharing best practices. It is something that is a bit challenging because each of us is individually developing our own domestic best practices in real time. I have had conversations with some of my international colleagues about it, and they're doing in their systems in one way or another what we're doing in ours. I think if we could raise it up a level and cooperate more internationally, it would be a good thing.
Okay, I have about a minute left. We also touched on the export industry. I'm from the great state of Ohio, and we have the 9th largest export industry cited in 2014. And in the previous year, that industry allowed us to employ some 259,000 employees. My district also had about 10% or $5.7 billion of the $52 billion worth of goods in the state of Ohio. You stated that when foreign economics falter, they import less from the United States businesses and they invest less in the United States. Can you give me some idea of what the delay on us having export-import would do or how it would affect the IMF?
So let me separate the questions. There have been a lot of questions today that have suggested that the IMF shouldn't have intervened when Europe's economy was in a state of crisis. Europe is the United States' largest trading partner. If Europe doesn't recover, their demand doesn't recover. If their demand doesn't recover, they don't buy U.S. goods, which means we don't export. So we have a very direct interest in making sure that the people, the countries who import from us have functioning economies to maintain demand. So I think we benefit quite directly from that. The Export-Import Bank is kind of the other side of the ledger. It's a question of whether our companies can compete on a level playing field. And I just don't think in a world where other countries are offering subsidies for exports, U.S. companies should be asked to unilaterally disarm.
Time of the gentlelady.
That's why we should extend the Export-Import Bank.
Thank you.
Time of the gentlelady has expired. Chair now recognizes the gentleman from South Carolina, Mr. Mulvaney.
Thank you, Mr. Chairman. Just very briefly to follow up on a question the gentlelady from Ohio asked you. You said that not a day goes by when you don't worry about cybersecurity. Was that the case when you were Secretary? Were you at the State Department?
Look, I will.
I'm sorry, just yes or no. Did you worry about cybersecurity when you were in State? And then I'll go on to the other questions I was going to ask.
I wasn't Sector Head for Finance until I was at Treasury.
Okay, so you didn't worry about cyber when you were in charge of operations at State?
No, I didn't say that I didn't worry about cybersecurity.
You see my point, Mr. Lieu, but we'll move on. So here's the questions I want to ask you today, because you sent a letter last week about the debt ceiling, something we haven't had a chance to discuss much, a little bit here today. And you closed it with the typical letter saying that you were beginning to use your extraordinary measures, that the debt ceiling had technically been reached, and that you closed the letter by saying that the creditworthiness of the United States is not a bargaining chip, and I again urge Congress to address this matter without controversy or brinksmanship. I happen to share that sentiment, so I thought I'd give you the opportunity now to try and walk back some of the brinksmanship and take this opportunity to assure the financial markets that interest will be paid on the debt, sovereign debt of the United States. Look in the camera and tell people that we have enough money to pay the interest on our debts, and you have the technical ability to make those interest payments on the debts, and calm the financial markets that might otherwise be roiled by concern over non-payment of debt.
Congressman, I hope that we're not going to have another debate like we've had in the past where the world is hanging on whether or not the United States
I'm hoping the
will pay
same
it.
thing, Mr. Liu, and you have the opportunity right now to say we have
No,
enough money to pay the debt and we have the ability to pay the debt. The
What I-
only thing that prevents us from paying the interest on our debts is whether or not the president chooses to do so or not. Isn't that
No,
true?
Congressman, what I've said many times and remains the case is if we hit the debt limit and Congress does not act to extend it, as only Congress can do,
Correct.
we do not have the ability to meet all of the obligations of the United States, and it would be the first time in history we couldn't pay the bills.
And
of
you
the
and I have
United
had that
States.
conversation
You're
about
asking
what-
about one set of bills, and I've acknowledged to this committee that technically we could make interest payments. We do not know the consequences of trying to make some payments and not
Thank you
others.
for mentioning that, because you and I have discussed this before. This is not new for either one of us. And I had a chance to ask you the last time you were here a question, because previously you had testified to the Senate that you didn't have the technical ability to prioritize payments. And then you wrote a letter to us right before your last hearing in front of this committee and said you did have the technical ability to do that. And I asked you a question. I said, when did you know that they, in this reference, that's the New York Fed, were technologically capable of making the payments? And you said the question is not aware without we make the payments. And I interrupted you and said, I'm not asking that, Mr. Liu. When did you know that payments could be made? And you said, Congressman, I would have to check. Have you done that?
Well, Congressman,
Have you done that? You told this committee you would check on when that knowledge became available to you. Have you done that since the last time you were here?
Congressman, what I said to the Senate committee was...
I'm not
true
asking
then
you
and
what you
it's true
said to the
now.
Senate committee. I'm
Well,
asking you what I asked you. You told me you checked to find out when that knowledge and information was made available to you. Did you do it?
I have done it, but if you're asking me today, could I tell you the date? I can't tell you the
So
date.
you
Yeah.
didn't know last time you were here, and then you knew and you've forgotten again, and now you don't know again.
Look,
Is that what you're
Congressman,
saying?
the question is, we do not have the technical ability to go through all the bills the United States pays and say we're going to pay this one and not that one. The technical question of can we pay interest? Yes, we can. But what about benefits to Social Security? What about veterans? What about vendors? What about
I
electric
understand,
bills?
and we've had that conversation, Mr. Lewitt. What about the money for giving Swedish massages to bunny rabbits? We do that. What about money for studying whether or not sea monkeys synchronize when they swim? Are those payments just as important as paying the interest payments on our debt?
Congressman, I believe that the United States is a country that makes a commitment, it pays its bills. And when we make commitments to veterans, we pay the veterans.
we
When we
believe
make
that,
commitments to
Mr. Lew.
Social
That's
Security, we pay
it's
Social
not the issue.
Security.
Let's come
And
back
I
to the
don't believe
original
we
issue.
have the ability to make the kind of decisions.
Why
across all the
won't
bills
you
we
take steps to satisfy and calm the financial markets in this country and around the world to let everybody know who holds U.S. debt that their interest will be paid? Why won't you do that?
The only way for the United States to make all its commitments.
Now, did I ask you that? Did I ask you about
is
all
for Congress
payments?
to
Have the
extend the
words
debt
all
limit.
payments come out of my mouth in reference to a question? Why won't you do that? I've got 30 seconds.
Congressman,
Here's my point to you, Mr. Liu. You want the brinksmanship.
No,
you
Congressman,
need
I
the
wa-
brinksmanship. You need the threat of financial turmoil in order to accomplish what you want to accomplish
Congress-
politically. And all I'm asking you to do is do your job and calm the financial markets and say, look, interest payments are going to be made.
Congressman, my
Why
job
won't
is to
you
make
say
sure we can pay all the bills of the United States. You
Thank
cannot do
and
that
we'll agree
unless
with
Congress
that.
extends
Can we
the debt
pay the
limit.
interest?
Congressman, you can.
Do we
you
have enough
cannot
money to pay
preserve
the
the full
interest?
faith and credit of the United States if you
I
don't
cannot
raise the debt
believe,
limit.
Mr. Chairman, that I have the Secretary of the Treasury of the United States here who has the opportunity to satisfy our debtors, both domestic and internationally, that we will pay our debts with interest at the appropriate time, and he refuses to do so. It is a dereliction of duty.
Time of the gentleman has expired. The chair now recognizes the gentleman from Illinois, Mr. Holgren.
Thank you, Mr. Chairman. Secretary Liu, policymakers from across the political spectrum should be able to work constructively together to refine at least some parts of Dodd-Frank, especially those that most damage our economy. You've heard it certainly from both sides of the aisle of pain, especially community banks are feeling, but so many others as well. Unfortunately, during his State of the Union address on January 21st, 2015, the President threatened to veto any legislation passed by Congress that he viewed as unraveling the new rules on Wall Street. You echoed the president's sentiments in an op-ed you published in the Washington Post in January. This committee has passed a number of bills over the past 2 years, many of them with overwhelming bipartisan support to address unintended consequences or harmful effects of provisions of the Dodd-Frank Act. Virtually without exception, the administration has opposed these efforts. In May 2013, you personally signed a letter expressing opposition to several bills then under consideration in this committee, making largely technical changes to Title VII of the Dodd-Frank Act. One of those bills, to exempt commercial end users from the margin requirements imposed by Title VII, passed the House by a vote of 411 to 12. Another, relating to the sharing of swap-related information with foreign regulators, passed the House by a vote of 420 to 2. A third, clarifying the treatment of derivatives trades entered into by non-financial end users with affiliated entities, passed the House by voice vote, a unanimous vote. The administration's unwillingness to support even these modest changes to Dodd-Frank, each of which commands virtually unanimous support from Republicans and Democrats, suggests that nothing we send the president will be deemed fit for his signature. The administration's insistence on defending the Dodd-Frank brand at all costs is made all the more mystifying by the fact that the primary author of the law, our former colleague Barney Frank, has identified a number of provisions that he believes should be revisited. What's more, then Fed Chairman Bernanke, in his last hearing with us, listed multiple bipartisan legislative reforms that policymakers could unite around to improve our financial regulatory system. They both recognize that a law that runs to 2,300 pages and imposes at least 400 mandates cannot possibly be perfect, and that changes are therefore warranted. Put another way, we shouldn't treat Dodd-Frank as the Ten Commandments handed down from on high and demanding our complete devotion. So my first question for you, Secretary Lew, is what reforms could we pursue that you would not label as unraveling Dodd-Frank? For example, in an appearance before the committee last July, Chairman Frank labeled as arbitrary Dodd-Frank's $50 billion threshold for automatically designated banks as systemically important. Would the administration consider modifying Dodd-Frank's SIFI threshold? Yes or no?
Congressman, as I said earlier, we treat $50 billion institutions different from trillion-dollar institutions, both in the law and in the regulations, and there's substantial regulatory flexibility, which I believe should be used to address the different circumstances.
Would you support changes in Dodd-Frank that would recognize those differences?
I'm not of the view that it requires legislation right now until we know that the administrative flexibility is inadequate. I think some of the earlier cases that you cited were pieces of legislation that were being passed while the rules implementing the original law were still being drafted. I don't disagree that a complicated piece of law is not holy writ. On the other hand, I think if we look back over the last 4 years, there has been a serious effort to repeal Dodd-Frank and to undermine some of its core protections that have made our financial.
The thing I wanted to point out in that, with those passages where they were passed in a bipartisan nature, unanimous, some of them. So to say that that this shouldn't have happened or it was premature, I think the vast majority of people up here on Capitol Hill disagree with you, and I also think financial markets disagree with you that this is necessary. In the same testimony, Chairman Frank supported exempting banks below a certain asset threshold from the Volcker Rule. Several regulators, including the Comptroller of the Currency and Federal Reserve Governor Tarullo, have expressed similar sentiments. I wondered, would the administration consider a small bank exemption from the Volcker Rule? Yes or no?
Just to be clear, the only small banks that are affected are those that engage in proprietary trading. So, and the standards for compliance for small firms reflect the differences between small firms and large firms. I think that the challenge is to make sure that all of our financial institutions are as safe and sound as.
I see the challenge is getting the administration to work on some of this and stop protecting a law that its author has said needed some changes. It's passed in bipartisan ways over and over and over again of common sense reform. Any legislation that passes out of here can be improved. And absolutely, this is a law that could be improved. It would be very helpful if the administration would join with us in trying to make some of those improvements. My time has expired. I yield back, Chairman.
Chair now recognizes the gentleman from Florida, Mr. Ross.
Thank you, Mr. Chairman. And Mr. Secretary, thank you for being here. Read nothing into the fact that I'm on your extreme right here today. But I do want to talk to you about something that I think that we have some bipartisan support to address. And recently, Just last month, FSOC came back with some regulations dealing with transparency with regard to systemically important financial institutions. And while I think it's a step in the right direction, I'm concerned that it didn't go far enough. They did not address concerns about how to mitigate systemic risks. It did not create a process that would reduce potential threats to the financial system by allowing a company or its primary regulator to identify risks before designation. For example, today's law as it exists today, a non-bank financial institution that is being considered as a SIFI doesn't really have any guidance to be made aware that they're going to be in this particular situation. They don't have any mechanism that FSOC can provide them with about their profile to help them get out of it. We've got no notice. And my concern is that while transparency is very important, we've got to make sure that if our ultimate goal is to remove them from a SIFI designation, that they have the opportunity by way of notice, by way of guidance in order to get out of there. And so I have some proposed legislation that has some bipartisan support that I will be filing here shortly, but it addresses the method and manner by which FSOC would deal with systemically important financial institutions, specifically non-bank ones. And wouldn't you not agree that FSOC's primary focus should be to identify and ensure systemic risks are addressed rather than simply delivering a non-bank entity to the Federal Reserve for yet another undefined regulation?
Congressman, I think that if you look at the new procedures that we adopted, they were very much designed to engage with firms earlier.
And would you not agree then that codifying these rules may be in a good position? Because your successor may take a different position, and obviously this seems to be the step in the right direction.
I think if you look at the evolution, I mean, FSOC is a 5-year-old organization. It had a good initial set of rules. It now has a refined approach. There was a lot of communication going on even before the new rules changes, so it's not as hard of a change as.
But I guess you would agree that the rule change.
I don't think there's any going back. I think these things move forward, not
to a greater degree of transparency and procedure. Would you not agree?
Yeah. Look, I think we have tried since I've been chair of FSOC on multiple occasions to expand the transparency, to increase the communication. And we will continue to look for opportunities to do that. I don't think that.
But returning them to the Fed for regulation when it may not be their primary regulator, that might not be the best way.
Well, look, the process of designation is one where the responsibility on FSOC is to determine whether or not there's a systemic risk.
Correct.
The remedy is prescribed in the statute that the Fed supervises if that determination is made.
And with regard to, let's say, for example, international standards, we've got FSOC's dealing with the global systemic financial institutions, and I think that there's been some concerns that, for example, the independent insurance expert on FSOC said that different types of non-bank financial companies may be receiving disparate treatment both in the Council's analysis and processes. Is this something that you would agree, and we might need more aggressive representation on behalf of the insurance industry in dealing with these global capital standards involving insurance companies?
I think that our representatives have been advancing the interests of the U.S. in this process effectively. There's been a lot of communication between federal and state officials, between private sector.
But understanding the impact that it could have on our domestic insurance market if we're having to impose upon them international standards, which we had a chance to preempt had we had a little bit more aggressive representation.
Yeah, I think that the representation is appropriate, the consultation is appropriate. There's obviously a lot of interest and a lot of consultation.
Lastly, I want to address one thing with regard to asset managers. You know, that the American Action Forum did a study in 2014 and found that additional capital requirements on asset managers could cost American retirees at least $100,000 in potential savings accumulation. And they get this because they say that now with these increased capital standards, which is as much as 8%, and most of the people who invest in these funds are saving for retirement, saving for college funds. This has a significant impact on mom and dad and grandma and grandpa that are trying to set aside for the future. Does FSOC take into consideration the impact that this has on the bottom line of these individual savers?
Okay, the The way FSOC goes through the process of determining whether or not a firm presents the kind of financial stability concerns is by going through an analysis of what the firm's
And they should take
impact
that
is.
into consideration.
That's the principle.
Because we want to protect the consumers and make sure they
But
get
just to be
return on
clear, in
investment.
asset managers, as we went through the process and came to realize that there were more concerns about specific activities than necessarily the firms that were being looked at, we also took a step back and shifted the focus to look primarily at activities that may need attention. I think that shows the openness of the
I appreciate
process
that.
to
Time-
learning as we go through.
Time of the gentleman has expired. For the benefit of the witness and remaining members, it would be the chair's intention to clear the present queue, allow no other members in the queue. Votes are expected on the floor sometimes within the next 15 or 30 minutes. We will attempt to clear the queue prior to votes. Gentleman from North Carolina, Mr. Pittenger, is now recognized.
Thank you, Mr. Chairman. Mr. Secretary, my questions relate to tariff financing. I'd like to ask two questions, and I hope to get some precise answers. First question involves information sharing between the United States government and financing, tariff financing. Mr. Secretary, the Financial Crimes Enforcement Network, FinCEN, as it's known by, has two responsibilities, as I understand it. Oversight of financial institutions to prevent money laundering, as well as information sharing among the agencies. With that in mind, it's my understanding that U.S. law enforcement, including U.S. Customs and Border Patrol, have access to FinCEN data, but only can access the database in the case of specific situations, and they must request that there's no information sharing agreement between Treasury and Customs. You know, this seems to me to be very illogical and would impede our ability to be effective, particularly in view of the enormous growth in trade-based money laundering. I would really appreciate a very precise response on the explanation of when this would be corrected and if this can be done without any further legislation.
Congressman, I'd be happy to get back to you on the specific question about what the agreement for data sharing between FinCEN and the Customs and Border Patrol is. In general, there is cooperation with law enforcement entities, but obviously it's within boundaries that are to protect the fact that we have access to information that shouldn't be shared broadly. I'd have to check on the specific documentation.
Mr. Secretary, these are two government agencies that are dealing with terrorism and trying to avert that. You have been head of operations in the State Department. You certainly understand the importance of agencies working together. Has it occurred to you to maybe sit down with Secretary Johnson and try to hammer out an agreement?
Well, I do sit down with Secretary Johnson on issues that are brought to my attention that require us to meet. I have to look into this question.
Well, can you suggest to me any reservation that you would have, or why we would not have an agreement, a working agreement between Customs and between the Treasury?
I start out with a strong bias that we ought to work as one government. We ought to cooperate and collaborate, and I've spent most of my career trying to take some of the boundaries and barriers down. So I start out sympathetic.
Mr. Secretary, you said earlier in your testimony that we have very aggressive and effective laws for the banks. You said that we have systems in place for the banks. This seems to be a very prudent system to have in place to be able to identify important data for tracking terrorism financing.
Yeah. So, Congressman, I'm happy to get back to you. It has not been brought to my attention that there has been an issue between Treasury and CPB. I'm happy.
Would you agree with me that there should be an agreement, an information sharing agreement between the two agencies?
I agree there should be cooperation to the maximum extent we can to do our jobs because there's sensitive personal information involved here. Obviously, there are limits. I can't tell you without looking into it.
Okay, I've got one other question. Mr. Secretary, of course, as you know, the terrorists are seeking other ways for their financing. Cybercrime clearly is a major growth industry for them. We continue to identify the hackers. However, they live in jurisdictions like the former Soviet states that we have no extradition treaties. I'm thinking of Ukraine in particular, but I'd like a precise discussion on how we can proceed on with cybercrime extradition there and in similar other countries.
Well, obviously, we have taken actions, and some of those legal actions have limits because of extradition. We can't compel extradition where there aren't extradition treaties. What we can do is look at what other tools we have, where we see evidence of cyber crimes, and we're looking to see what other tools we have available.
Regarding the current concerns we have today, is it on your agenda to try to work out these extradition agreements with these countries?
Well, obviously, extradition is not my.
As you see the problem, do you believe that this is something that should be on the agenda?
I would say it's on my agenda to look at what we can do if we don't succeed with extradition. I leave to the Justice Department the question of extradition.
Could you get back with me on this information sharing agreement?
Sure, happy to.
Time the gentleman has expired. Chair recognizes the gentleman from Connecticut, Mr. Himes.
Thank you, Mr. Chairman. Thank you, Mr. Secretary, for being here, for your patience and your even-handed focus on our international organizations and obligations. I want to ask a question which is related but tangential to international policy, specifically with respect to the upcoming potential trade agreements. As you know, we are having a vibrant discussion on our side of the aisle about these trade agreements. One of the concerns and criticisms leveled at TPP in particular, but other trade agreements, would be that, in particular, the investor dispute resolution mechanism could open an extrajudicial path to the alteration of our financial regulatory structure, could result in elements of Dodd-Frank being changed or eliminated. That is probably greeted with some joy on the other side of the room, but concerns us over here quite substantially. So I wanted to just give you a couple of minutes to give us your perspective on whether we should be concerned that investor dispute resolution could, in fact, erode some of the protections that many of us really fought hard for.
First, I would say if you look at the history on investor-state dispute settlement, the United States, I don't believe, has ever lost a case. So our track record is strong. There's a reason for that. We have a system of law. We have an even-handed way of administering law, and our system, I think, will continue to be durable even if there were challenges. When you look at why it's an important issue, when American businesses are doing business abroad, there are concerns about things that could amount to expropriation or certainly blocking the ability to take capital out. I think that the history of investor-state disputes has been to give companies the ability, individual investors the ability to defend their interests. It's not meant to undermine organic laws that are legitimately in place. To the extent that there have been concerns that there's been maybe some overly aggressive use of investor-state disputes, I know that that's something that negotiators are looking at dealing with in the context of this negotiation.
The facts, as I've heard them, is that the United States has been subject to 16 actions in the investor dispute area, all 16 of which we have won. But let me push you a little bit here. I heard you say that Dodd-Frank and other statute would be durable. I'm not sure that's good enough for some of us, and you said it's not meant to undermine our regulatory structure. I'm hoping you can paint a slightly more granular picture of that, because obviously we would be quite concerned if all of a sudden after the work of this body, we found ourselves, Dodd-Frank being amended because the
I totally agree.
brought an action.
Yeah, I don't think we face the risk. I mean, if you look at one of the issues, foreign banks being subject to Dodd-Frank, that's well based in U.S. law. That's not at risk of being reversed in an investor-state dispute. It's really meant to deal with kinds of policies that are not based in the kind of legal foundation that a law like Dodd-Frank is.
So you don't regard, just based on what you know, and you probably know more than most of us about the negotiations around TPP in particular, you don't believe that there is a meaningful risk that a trade agreement would essentially undo the work of this body?
Well, I'll tell you that moving from TPP to TTIP, we have assiduously resisted bringing prudential regulation into the scope of a trade agreement because we agree 100% that prudential regulatory standards are not something that should be overturned by some trade review. I don't believe that ISDS gives you the ability to do that. We certainly have resisted, in the context of TTIP, doing it through the front door. And I agree 100% that we ought not to put our prudential regulations up for review in a trade context.
Thank you. Thank you, Mr. Secretary. Mr. Chairman, I yield back balance of my time.
Gentleman yields back. Chair recognizes the gentleman from Pennsylvania, Mr. Rothfuss.
Thank you, Mr. Chairman, and thank you, Mr. Secretary, for being with us today, and it's past 1 o'clock already. In 2014, the so-called BRICS countries, Brazil, Russia, India, China, and South Africa, agreed to establish a new development bank to finance infrastructure and development projects around the world. The countries jointly contributed $50 billion in initial capital for the bank, and it is expected that the bank will start functioning and financing projects by the end of this calendar year. Many see this as a direct challenge to both the IMF and the World Bank. Perhaps because they have more recent memories of the lack of electricity in their own countries and they continue to build out their grid, the BRICS countries have a very different view on fossil energy than the IMF, the World Bank, and the President of the United States. While we unfortunately continue to pursue policies that are squarely aimed at killing coal and coal-related projects, the BRICS countries continue to give strong support to their coal industries and leverage them to drive economic growth through reduced energy prices through exports. Experts agree that the new development bank will play a significant role in the financing of new coal-fired power plants around the world, particularly in developing countries that are desperate for affordable and reliable energy. While this is certainly good news for these countries, it also negates the policies of this administration, the IMF, and the World Bank to prevent these coal projects from being financed. Given what the new development bank is doing, why does the administration continue to pursue its misguided anti-coal policies?
Congressman, our objective is to promote sustainable energy resources to be developed, and
won't that objective result in just funneling developing countries to the doorsteps of Russia and China?
To the extent that you're talking about very poor countries that don't have an alternative to coal, our policies provide, assuming that appropriate technology is used, for financing those projects. So
are those policies consistent with what the new development bank is doing? So when they're looking
part
to
of the
finance,
challenge is none of us know the policies of these new international institutions.
well, the policies is they're going to fund these projects. And my question is, won't this actually do more harm to the environment because it will just result in many more coal projects being built using Chinese and other foreign technology that is not as advanced and clean as ours?
Frankly, I think the challenge we have is for the U.S. to continue to show its leadership in the international financial institutions that we've helped build. It's one of the reasons that IMF reform being ratified is so important. Our ability to keep action in the organizations that have high standards is critical to our leadership. I think that it's not an accident that emerging economies are looking other places because they're frustrated that frankly the United States has stalled a very modest and reasonable set of reforms in the IMF. We will.
Well, maybe I would suggest that they're going to go to the new development bank because they know they can get their coal project financed and they can't do it through the IMF or the World Bank because of this administration's policies.
And I know that there are other countries who are joining those institutions that are also concerned about environmental standards, and I think that those issues are going to have to be worked out as the new banks develop their rules. I mean, what we're responsible for is what we do directly and what we do through the institutions that we are playing a leadership role in.
Well, I wanted to ask you a quick question, because I saw this in your written testimony. You didn't bring it up in your oral testimony, but you said when it comes to global challenges such as the environment, food insecurity, and gender imbalances, the world continues to rely on multilateral institutions and strong U.S. leadership within them to help developing countries make concrete investments to meet these challenges. It's tangential, but there is a huge gender imbalance in Asia. There are 15 to 20 million missing little girls because of the coercive one-child policy that China has, and the disproportionate impact that's had on little girls. It's safer to be an unborn little boy than an unborn little girl in China. Can you point to anything that this administration has done to address that gender imbalance?
Congressman, I think that there are a lot of things in China that they need to take a hard look at. Obviously, this is a policy that they are continuing to review, and I certainly hope that they have a change.
Well, I would suggest it might be helpful if the president didn't rescind the Mexico City policy. Tell me something. As when you were Deputy Secretary at the Department of State in 2009 and 2010, did you ever send an email? Did you ever send an email from a non-State Department email account to Secretary Clinton or any other state employee?
It's quite a while ago, Congressman. I generally used my government email.
So you're saying it is possible you would have used a non-State Department email address to send something to Secretary Clinton?
Yeah, Congressman, I used my official email for email.
Did you ever receive an email from Secretary Clinton to a non-State Department email account?
Yeah, I would have to go back.
What about when you were White House Chief of Staff?
Time.
It's a long time ago, Congressman. I don't recall.
Time of the gentleman has expired. Chair recognizes the gentleman from Colorado, Mr. Tipton.
Thank you, Mr. Chairman. Mr. Secretary, thank you for taking the time to be here. In your opening statement, you talked about the American recovery that's going on right now, but I did note that you did not speak to the point that we have the lowest labor participation rate in 37 years, that we're seeing for the first time more small businesses shut down than there are new business startups in this country. And one of the important issues that we have, particularly in rural areas like I represent, is access to capital from our community banks that's going on. And recently, Senator Warren was stated that the financial performance of the community banks shows that Congress and the regulators, I think, have done a pretty good job of tailoring the rules to be able to protect community banks. Do you agree with that?
Look, I've said in response to several questions, I think that both the law and the regulations implementing the law have taken account of the difference between small, medium, and large-size institutions. There may be additional flexibilities that need to be used, but I generally agree that that there has been a lot of attention paid to not treating all financial institutions the same.
Let me give you an example in my district. Just met with a small community bank in Delta, Colorado, Colorado First National Bank. They said that burdensome capital requirements and excessive regulations require the money to be able to spend money on just complying with regulations as opposed to being able to grow the bank and to be able to have access, availability of capital for loans for that local community bank. And they said the bottom line is they really feel that they no longer run their bank, but it's being run by the federal government and by regulations. What do you tell that small bank?
Look, I know that there are a lot of pressures on financial institutions of all size. What I would tell that bank is that we have designed rules, and the regulators have designed rules to try and take account of the differences in terms of the level of reporting and what's required. And it would really depend what the specific issues were.
You've spent a fair amount of time being concerned about small community banks and addressing that in your meetings?
Yes.
Yeah. You know, it's interesting because we did a review of the minutes of the 40 FSOC meetings conducted from 2010 to 2014, and it yielded not a single reference to community banks or the effect that regulatory burdens are having on their viability. When did you talk about it?
I mean, many of these issues are not FSOC issues writ large. Individual regulators.
Yeah, but under Section 112 of the Dodd-Frank Act, that is your responsibility.
I have, over the last 2 years since I've been chairman of FSOC, taken seriously the coordination responsibility, particularly in areas that involve some of the housing issues, and there have been conversations, but it's not in the context of an FSOC meeting because it doesn't. It's in the jurisdiction of the individual regulators.
But there's no mention of dealing with small banks, and you haven't dealt with that in those meetings. I want to be able to drive home that point that we are really...
We have not ruled out doing a more formal review, but we've been in the implementation stage where agencies have had the first round of implementing Dodd-Frank on their plates, and that's really what we've been engaged in.
You know, I'd like to go back actually to the chairman's first line of questioning in regards to the FSSB, because I'm not really sure I heard an answer to that question. When the FSB tells members that they expect full, consistent, and prompt implementation on agreed reforms on international finance systems. Is he assuming that you will obey?
I think that it's well known that the decisions on decision-making in each country are made by the national authorities in that country. We've always been clear that we retain control of.
When did the FSB, I think it was MetLife, when did they determine that they were going to be a SIFI?
I would have to go back and check the date, but we made an independent determination in FSOC.
How long after the FSB made the determination?
The FSB's review and the FSOC review were entirely separate.
Okay. Are decisions made by the FSB, do you believe those to be binding on Treasury?
I believe that the FSB process does, it permits us as a country with the highest standards to drive the global standards to a higher level, which makes it a safer financial system and a more level playing field for the United States. But in each case, countries ultimately retain their own national authority over their regulatory activities.
So again, I'm sorry, I'm just not really hearing the answer truly to that question. Once the FSB makes it, do you view that as being binding? That was kind of the original agreement.
Yeah, I don't think there's anything about participation in the FSB that relieves national authorities from the ultimate responsibility for making their own policy.
Time of the gentleman has expired. The chair recognizes the gentleman from Texas, Mr. Williams.
Thank you, Mr. Chairman. Thank you, Mr. Secretary, for being here. I'll be somewhat brief here. I'm a small business owner. I'm a Main Street guy. I employ a lot of people. I'm a job creator, and I'm an auto dealer. And I would say this just real quickly. I heard you say earlier that before we could address the $50 billion or under banks, we need to get Dodd-Frank completed first. Well, I would just ask you, don't wait that long. It's the worst legislation that I think we've seen in a long time. And you can't wait that long, because if you wait that long, you're going to lose small businesses, you're going to lose banks, we're going to lose jobs. So I just humbly ask you to think about addressing that before you totally ramp out the complete level, the Dodd-Frank, because I can tell you from a banker standpoint, people are actually, they'll tell you they're hiring more regulatory officers than they are loan officers. That's a real problem. So with that being said, let me say this. You said the U.S. economy looks like a well-oiled machine when compared to foreign markets. And when I would just say, too, an $18 trillion debt, that's not a well-oiled machine, and that statement bothers me. The long-term outlook, I believe, for the U.S. economy is not that great. It could be considered bleak. Just last week, the Congressional Budget Office issued a report that estimated that President Obama's budget would add nearly $6 trillion to the deficit over 10 years. Let me repeat, that's $6 trillion added to the deficit we have now. That's debt held by the American public. It's projected to grow rapidly as a share of the economy grows in the years ahead, rising from 74% today to 106% in 2039. Now, the rising cost of debt will have a significant consequence, as we all know, on the economy and the federal budget. So let me ask you this. You stated that every week we roll over approximately $100 billion in U.S. bills. And if U.S. bondholders decide that they wanted to be repaid rather than continuing to roll over their investments, we could unexpectedly dissipate our entire balance. Now, with that being said, do you think it's healthy for the Treasury to be forced to rely on reissuing securities to make principal payments on securities coming due? And how is that any different from taking out cash advances on a credit card to pay bills other than another credit card, on another credit card?
Congressman, we have the deepest Treasury market in the world. I think that if you look at the progress we've made on fiscal policy in the last 6 years, it's been enormous. We had a deficit that was just about 10% of GDP. It's now coming below 3% of GDP. In the 10-year budget window, we stay that way. I think if you look at the challenges we have in the near term for this country, it's that we do the things we need to keep our economy growing. And that means investing in people and education. It means investing in infrastructure. And frankly, it means investing in defense. One of the problems I have with the budget that's being unveiled today is that it short funds the critical things we need to defend our country and to build a strong foundation for the future. What we need is a bipartisan conversation about how to maintain a responsible fiscal path. But with all respect, the fiscal position today versus when this administration took office is vastly improved. And I think we've done a lot of hard work to get there.
I know in the past you and I have discussed, you have never really been in the private sector. I've only been in the private sector. I'm going to tell you, the economy is not that good. When you have the high unemployment we got, the people on food stamps, we can get into that. It's not that good. But you didn't really answer my question when you said that if the bondholders decided they wanted to be repaid, could we do it?
The challenge that we have is making sure that we remain able to fund all of our needs. That means funding new debt. It means rolling over old debt. If you look at the way our trajectory looks, you're going to 2039. The budget for the next 10 years, for the period immediately beyond that, we stay in the sustainable level of both deficit and debt as a percent of GDP. And there's a lot of work we still need to do going forward on a bipartisan basis, but we've made enormous
All
progress.
right, let me ask you one other question before my time's up. CBO projects that interest on the national debt will make up 90% of the deficit in 2023. That's a huge figure. How can we expect to see balanced budgets if future interest payments on debt will continue to force deficit spending for decades when we say an $18 trillion deficit is a well-oiled machine?
Well, Congressman, the goal of reaching what's called primary balance is to not have anything but debt payments that are the reason for a deficit. So it will become a larger and larger percentage of the deficit as we approach primary balance. That's what that statistic reflects. If you look at the international standard, primary balance is the goal that most countries look at and that international institutions look at for sustainability.
I yield back, Mr. Chairman. Thank you.
Time of the gentleman has expired. The chair wishes to advise all members there are votes pending on the floor. 8 minutes, 55 seconds left. With apologies to Mr. Schweikert, Poliquin, and Ms. Wagner, the chair intends to clear one more member, the gentleman from Arkansas, Mr. Hill, to accommodate the floor schedule and the secretary's schedule. Then we will adjourn the hearing. Gentleman from Arkansas is recognized.
Thank you, Mr. Chairman. Thank you, Mr. Secretary. It was certainly a pleasure in my career to have 4 years working at the Treasury for one of your predecessors, and I enjoyed those days. Following up on Mr. Lucas, Mr. Stivers, Mr. Tipton, I want to talk a little bit about this community bank approach as well. Section 112 under the resolving regulatory conflicts and looking at burdensome regulation really does give the FSOC a lot of power in that regard to be a leader, which I think is the purpose of the FSOC. And I agree with Mr. Williams that I encourage you to take that mantle that all of us in government do, which is you can do more than one thing at a time, which is that management responsibility in addition to trying to implement Dodd-Frank.
And Congressman, as I indicated earlier, we have not ruled out using it, and I'm happy to take a look at whether it's the appropriate time.
Good. Well, I'd like you to consider the use of cost-benefit analysis at the FSOC level and looking across the regulatory system generally. What would be your thought about that?
Well, look, cost-benefit analysis has many different meanings. If you look at the broad costs to the U.S. economy of the financial crisis in 2008, it was enormous. It wouldn't have shown up in any cost-benefit analysis. It was done before the crisis itself. So we have to find a way of looking both at the impact on a firm when you ask the question of cost-benefit analysis, but also the entire economy.
I understand that.
And I think balancing those considerations is part of what the whole Dodd-Frank lawmaking and rulemaking process has been about, to try to make it more costly to do things that are risky, internalize those costs, and to protect the general economy and the general public.
Well, you've had two positions now that I think have the prudential responsibility there at OMB and at Treasury, and these are important places to look out for that economy generally and not get down in the weeds of an individual regulator. But there are regulations that, while well-intentioned, have costs that exceed their benefits. Just this week, I got a letter from a banker that looking at the ability to repay rules under Dodd-Frank, they looked back and they used to have an 85% approval ratio for their 1 to 4 family mortgages, and now it's under 40%. Because of the burden of those rules. And so one way to use a cost-benefit analysis when you're looking like at residential lending is to look at all the rules, not just Dodd-Frank rules, but the qualified mortgage rule, the effect of appraisal rights, et cetera. So I encourage you to do that. And I encourage you, like Mr. Stivers, to put on the agenda of FSOC the burden on regulatory institutions as an official agenda item. Copy of the Fannie Mae and Freddie Mac conservatorship agreements. I've asked for that for over a month, and I have yet to get a document Could that be put on the list and have that sent to me, please? I have the preferred stock arrangements with those two companies, but I need the conservatorship arrangement.
I'll look into it.
Have you, on this email issue, I think American people are really frustrated by it, and I urge everybody in the administration to be focused on this. The IRS example on losing emails, all of us in the private sector would be excoriated by our regulators were we to lose our emails. Have you changed the policy at the Treasury since the IRS matter came up in terms of tracking them, managing them, overseeing them?
Well, the Treasury policy is that we do our business on official email, and that at least for the main Treasury, that there's preservation. The IRS system is a little bit different, and I know that every effort is being made both to recover what was lost. I'll have to get back to you on the.
Please do, because I think it's double standard that frustrates American taxpayers and business owners. Like in FINRA for regulated broker-dealers, the rule is all electronic mail and text has to be retained in a non-rewritable, non-erasable format and subject to daily review by a regulator or management and a 3-year retention. I mean, it doesn't strike me that that's the standard in the executive branch. Is that a good standard, that FINRA standard, sir?
Well, obviously, it is a standard that keeps email available for regulators to see, and that's a good.
Well, so if regulators should be able to see the emails within a broker-dealer, shouldn't we be able to see all the emails in the executive branch agency?
There obviously are differences, but I'm happy to take a look at it and get back to you.
Thank you very much. I yield back, Mr. Chairman.
Gentleman yields back. Members are advised there are less than 4 minutes left on the vote on the floor. No more members will be recognized for questioning. I wish to thank the witness for his testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witness to the chair, which will be forwarded to the witness for his response. I ask the secretary to please respond as promptly as you are able. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. This hearing stands adjourned. Different architect. So